session of loss. That's what we're staring at. Welcome to India Market Close with me, Hiral Datia and Neeraj Shah. Clearly, if you see Nifty 50, we're below that 24,650 mark on the borderline. No ups, no downs here. That's where we are at. Similar is the trend on the Sensex as well. Bank Nifty, marginal uptick on that front, 0.4% higher here. Now, the key in terms of Bank Nifty is trying to inch towards that 55,000 mark, but absolutely failing on that end. Let's quickly look at, what the PSU banking index is doing, and then we'll have a look at the Nifty 50 heat map, because this dichotomy is absolutely great. There you go, 1.5% up move coming in with regards to where the Nifty PSU bank index goes, and this is pretty much ahead of the RBI monetary policy. That's the reason why these kind of gains on this front. Muted moves on the other aspects. Let's look at the components in terms of Nifty 50 and see what that trend is looking like right now. You have more of greens versus the reds, so that is a positive. But one stock which is continuing to be on the uptrend, Hero Motors, started in the positive, continues to trade with gains of 2.7%. Few of the metal counters are pretty strong in trade, from a JSW Steel, Hindalco. It's a complete silver and zinc play that you're seeing currently that's happening. ITC is losing out, Trent is losing out, Titan is losing out. Titan was the top gainer when we started off the trading session. Today it's come back into the red. L&T, Bajaj Finance, Bharti Airtel, Reliance, few of the heavyweights which are trying to put pressure here as well. Overall, if you see in terms of India Wix, 11.56, that's up around 1.6%. So that is clearly telling you where the volatility is headed from here on. Let's look at the advanced decline ratio as well, because that will give you some bit of a flavor in terms of what's happening to the broader markets. You're seeing, convergence that did happen midday. And again, your declines have increased. We're almost at around 1,400 versus 1,000 advances on the markets overall. In terms of broader markets, let's pull up the Midcap and the Smallcap index. Midcap index, there you go, at the day's lowest level, 0.3% lower on Midcap 150. And if you see small cap 250 as well, similar kind of cuts at the day's low. So the pressure in terms of broader markets is way higher right now. A lot of stock specific action, sector specific action is what you're seeing. And I think Neeraj will take us through, what individual sectors are doing and individual stocks from the broader markets, Neeraj.
Yeah, Hiral, good afternoon, viewers. And it's been skittish with volatility moving up as well. Can that change is the key question, and we'll get to know over the course of the next few days. But there are buckets of stocks which are correcting, and a set of stocks or a bucket of stocks which are doing well too. So you have the Dixons and the Ambers, so the EMS players are under a bit of a cloud today, and both of these stocks too trading not at the lowest point of the day, but certainly lower in trade. So that's the first set of names you want to keep an eye out for. Sarma SGS is not too far behind, down about 3% as well. So that too is showing that pressure. KPIT Tech is the top loser on the Nifty 500, 6.3%. At a point of time was down about 7% in trade, or trading nearly at the low point of the day. Trying to think of the reason why this could be the case. Could it be expectations of a weak quarter from KPIT or something else? Remains to be seen. I think they will give their quarterly declaration, right? At that point of time, we'll get to know what happens thereof. There is weakness in Lloyd's Metal, there is weakness in Schneider Electric, there is weakness in Hitachi Energy. So a clutch of these names are trading at or around the low point of the day today. On the gaining side, Ola Electric, yet again a 5% uptick, so that's doing well. And the whole metals pack, Nalco, Hindustan Zinc, etc., are all doing well. Now when it comes to Hindustan Zinc, it's up about 2.7%. And I just want to bring out a small piece of research that we did in the morning, which I just want to highlight, that for Hindustan Zinc, it is one of the key 3 stocks that we mentioned in the morning as the stock to watch. But if you just look at the reason why this is happening, the silver play, about 40% of Hindustan Zinc's Q1 profits came in from silver, and silver prices are way higher than what they were at the end of Q1 too. So suffice to say that Hind Zinc might have some gains too, and we'll talk about that in detail with our experts. Let's get in Kush Bora to try and figure out how is he seeing the scenario today. Kush, thanks for joining in. Bit of an uptick in volatility, but the key is a couple of dealing rooms are saying that there might be some bit of a reversal and some bit of an uptick in the last 1.5 hours of trade. Do the charts show any possibility of the same?
Hi, Neeraj. First, a very good afternoon to you and to all the viewers. Possibility, yes. I wouldn't give it a very high probability just yet. The reason I say there's a possibility is because while we've had 7 sessions of negative closings, and that's a bit of a worrying sign. If you look at on the closing basis, the retracement of the September rally that we had when we had those 3 weeks of consecutive gains, 78.6% of that retracement comes at 24,625, close to those levels. And while we've dipped on an intraday basis, on a closing basis, we've held onto those numbers. Even today, we dipped below that, but Nifty is trading just above that. So it's definitely an attempt to find support. Now, where the concern is really is that there has been constant selling by FIIs, and especially in the cash segment, and that's why you're seeing a lot of big gashes on a lot of names, including including the likes that you mentioned, right now in your commentary. So yes, that's a bit of a concern. The first thing that needs to happen is that the fall needs to stem. We need to have one positive closing, but more importantly, what we need to see is the break of the lower high, lower low formation that we've been seeing for the last 7 sessions. That would be an indication of any kind of strength returning to the market. So yes, while there is an attempt at stabilizing, while there is an attempt at recovery, until it turns into a positive price action, my suggestion would be an avoid in terms of a trade, especially as far as Nifty is concerned.
Kush, afternoon. If you're looking at markets, not only in terms of today's session, we're nearly 1 year from that record high level that markets witnessed. Since then, Nifty is down nearly 6%. What is that kind of time frame you're seeing where we can expect that next high on Nifty 50?
Hi, Hiral. My standard answer for time frames is the crystal ball gazing. That I left my crystal ball at home, but no, I understand what you mean. This is a market where we're getting a little impatient. 4 years, we've been seeing consecutive new highs, and I mean from COVID to about 2024. I think 1 year of consolidation, while it seems painful as we go through it, maybe a quarter or two outside, out from here on when we start that up move will look healthy. So I think there will be some more consolidation that could happen. Even if we go out and hit that 26,200, 26,300 kind of new high, I don't know if the portfolios will really be performing as well as they did the last time around. These stocks were at those levels. So that will actually be a bit of a concern. So I actually expect the markets to consolidate, perhaps even, could be some negative bias as well going forward. But yes, I mean, I take it as 1 year of consolidation after 4 years of big up moves.
Okay, what about the ideas for the afternoon, Kush?
Difficult to find pockets of strength, but we continue to do so, Neeraj.
No, you can give us a short idea.
You know what the concern is, Neeraj? The short ideas are also not favoring the risk.
Yeah, it is not. Right? It is not. You're right, Kush. You're so right.
Give us a short idea, and any kind of short covering from here on, Neeraj, we'll see about 300-400 points of uptick on Nifty.
Kush, sorry, just before you give your idea, Kush, very sorry. So viewers, I must apologize because in the morning, on the part of the trade setup, I mentioned that now to have a large leverage short might not be a great idea because of this very reason. And I was asking Kush to give me a short idea. So Kush, apologies for that. But yes, please finish your point.
No, spot on, Neeraj. I would love to have a short idea as well because, why not make money on both sides? But just now the risk reward ratio doesn't favor. So since finances have been doing well, my ideas are from that fact. PSU banks, are a standout rank outperformer, from a very near-term perspective. Indian Bank, Bank of India, these are a couple of names that we've already discussed. So continuation of that trade. Indian Bank continues to shine today also. If you see the volumes on this one are picking up. So why not continue that trade? Previously, we had this with a target of about 735, 740. That's been hit today. So an extension of that to 750, 765, and the initiation price is 725. So if you put your trailing stop losses there, you lock in your profits. Very similar to that, Nippon India. Here too, we had this second target of 895, first target of 875. That's been hit today. Volumes again very healthy on this one. So financials really don't reflect what's going on in the rest of the market. On the upside in Nippon, 895, 915 are your targets, and 855 that initiation price becomes.
Okay, so Nippon Life and Indian Bank topics coming in from Kush, but it's that time where we do the stock of the day, and one company that is buzzing, Hero Moto. The counter has actually zoomed ahead in trade, tracking the ongoing festive season at the day's highest levels. What's aiding the counter, Puneet, is with us with this analysis. In comparison to 2024, Puneet, if you have to look at a Hero Motor in terms of the festive sales, how are they stacking up, number one? And two, why would this be a stock of the day for you?
Well, thank you for that. So, a couple of reasons, and we've taken this from one of the key launches last week as well in the 110cc space. That's the Destiny 110. This was launched at 72,000. That's the first key reason. And the second one, as you rightly mentioned, we put out the story yesterday on NDTV Profit that this could be one of a very strong 32-day period season for Hero MotoCorp, and that's the second key reason for that. Because apart from that as well, we've seen they're anticipating record sales in the festive season period, which starts from Navratri on day one and then goes across till the end of Diwali as well. And till that time, last year was a very strong period. But let me first start off with the scooter key aspect as well, because how big is India's scooter market? It's roughly 68 lakh scooters that get sold in the country in 1 year itself, and that's roughly 1/3 of the total two-wheeler market in India. Most of the sales actually has been dominated between the 90 to 120cc space, and now largely in the 125cc space as well, including all of those aspects. So that's the point number two. And point number three is rest of the segments are largely in the sporty segment as well. So let's pull up the table here and you'll get a sense of the domination essentially by players like Honda as well as TVS. Honda Activa sells roughly 28 lakh scooters in just 1 year itself, and that's the highest in terms of market share as well. Overall, I mentioned 68 lakh scooters, 28 lakh is of one company itself, that's Honda. But the other key player is TVS Motor at 15.4 lakh scooters is what they sold in the last year, and that is again a very, very strong number to say the least, because they have multiple brands. It was essentially a space that they weren't there till 2013. And brands like Jupiter, Vigo, as well as now Ntorq have made it a superpower essentially, with a new category created over the last decade. But watch out for Hero as well. It's at number 4 spot. It operates brands like Destiny and Maestro, and Destiny 125 is one. The 110 is now launched, so a new addressable market. But at 3.32 lakhs has fallen from the last year because of lack of new launches. But that will be one key trigger, is that they can increase their addressable market, try to challenge the number 3 player. And while it might take some time, TVS did it in 1 decade. Why not Hero MotoCorp? When you finally look at the EV space as well, that's the other one which will boost the company's presence in the scooter space. Roughly about 56,000 scooters have been sold in just the last 6 months. So starting from April till September is what this number is. Whole of FY25, they sold roughly 48,600. So they've already done what they did in last 1 year in just 6 months. Monthly numbers are indicating the company's market share has increased to 12%. This was roughly about 7% in April of 2025. So a considerable, almost a 50-60% jump in market share per month. And when you look at new models like the Vida VX2, that has been continuing the company's growth as well. Finally, record sales we mentioned for the festive period. That's one, because in 32-day period, they sold roughly about 15.98 lakh scooters, including motorcycles, of course, last year. They are looking to inch above that number as well. But largely in the scooter space, that's going to be one of the key positives for Hero MotoCorp going forward. The valuation is also sustainable compared to the other players like TVS as well as something like an Eicher Motors. So keep the stock on your radar.
Okay, so keep the stock on your radar. That's a Hero Moto. Thank you so much for that. Kush, the stock is at the day's highest levels. And if you have to peg this versus a Bajaj Auto or a TVS or even for that matter, a Eicher, the entire two-wheeler basket, may it be premium, entry level, what are charts indicating?
So I would suggest a very clear avoid on a Bajaj Auto. When the entire pack is doing well and the stock does not, then you don't really bet on such a stock. Eicher Motors continues to hold ground. Serious negative RSI divergences. I think this is in for a big round of profit booking, and you don't want to be the last one to enter, right? TVS Motor, I would still consider, because it's had its round of profit booking and gaining ground. But the momentum could slow because it's already had a good run up. But I would still consider this for a long trade with a stop loss around the 3360, 3375 mark for recent swing highs of 3600. Now coming to the stock from where you started the discussion, which is Hero Moto, this one still stands out. It's actually come a little late to the party, but it's now holding ground today. If you see, as you rightly said, gaining ground and near the high point of the day, I think this is due for a breakout. The recent high of 5,500 that could be taken out in this current rally. Volumes also fairly healthy and encouraging. So if you were to bet amongst these four names, Hero MotoCorp would be my first pick, and then TVS Motor. I would avoid iShares and Bajaj at the current.
And Bajaj, Hero Moto, a good pick coming in with a TVS Motors for a Kushbora. Moving on, Ceigall India, that's one stock to look at on the back of the order wins. If you see the counter, today trading with cuts of around 0.8%. Let me get in. Ramneet Sehgal, Chairman and Managing Director at Ceigall India. Ramneet, welcome to the show and a pleasure to speak to you as always on NDTV Profit. The recent order wins that you've seen, what is the kind of overall addition on the order book and the execution timelines for the same?
First of all, thank you for having me over. So yes, we have entered into two new verticals, which is transmission distribution and renewable energy. We have won almost 557 megawatts of renewable order, which is a mix of solar and solar plus BESS, which is battery storage. And then we have won another, we are L1 in Welgaon distribution, which is roughly around 500 crores, and which is on a tariff-based basis where we're going to get an annuity of about 58.5 crores for next 35 years. So we are very happy, and that was a strategy going forward that this sector is good, energy sector, and way forward there's no dearth in the work as governments are going ahead with creating a lot of new space in this, and a lot of gigawatts have to be added. So I mean, we are very happy. We are in a very happy space. And besides this, for existing work, we have got one LOA worth 431 crores, which is again a mixed use of a road, public health, electrical. Then another is a bulk drug park in Himachal. So with all these order book, we've added to new states also. And geography-wise, we are already in about 12 states now. And vertical-wise, we are in 11 verticals. So very happy to share that with this order book. We have our target or our guidance towards our investors was close to 5,000 crore for this year. But we have already achieved about 3,855 crores. Thank you.
Okay. Ramnik, good afternoon, Neeraj here. And the last, 15 days, I've seen an announcement about some order win or some LOA that you've gotten 4 times or 3 times at least. So congrats on all of that. Now, just tell us, because your order book is now starting to get diversified, where is it that the bulk of growth will come for you? Because in the call as well, I believe you've said that the dependence on highways is going down and you are doing a lot of other work. So tell us a bit about the current order book and where will the growth come from?
Thank you so much, Neeraj. So, as you rightly said, we are looking forward towards, as a developer, a project IRR. And in EPC space, we're looking forward towards a PAT. So we have 11 different verticals. We'll be quoting for all these verticals. We have spare BGs with us. We have spare surety bonds with us. So we just have to see our PAT, EBITDA levels at EPC level. And as a developer, the project IRR. If you're getting that, achieving that, it could be road, it could be renewable energy, it could be transmission distribution, it could be airport, it could be a railway line, it could be airports, so tunneling. So we are in almost 11 verticals. And order book right now with the LOA L1, we are close to 14,000 crore. And last year we did 3,400 crore. So fairly we're at more than 4.5x. So way forward, the way we guided that this year our target would be 5,000 crore. We've already achieved 3,855 crores. Fairly we have another 6 months of this year. So being in 11 verticals, it'll be easy play for a company like us to grow and to get the order book. Because fairly with 11 verticals, we can get it in any of the verticals. We just have to keep one thing in mind, getting a right PAT for the EPC business, EBITDA, and as a developer, right IRR at the project level.
Okay. The other question would, which is fine. So that's the strategy that you've adopted, but would it therefore be project by project basis, and therefore you cannot give a clear indication of where the growth vertical will be, because you are kind of vertical agnostic, you are more margin focused?
So typically at the project IRR, we look after 25%. which is a development projects, and a beta level we play 11 to 12.5 or 13 also.
So therefore my question is, since you're focused on the margins, will it be the case that you will be project agnostic or vertical agnostic? Whatever gives you that, you will take, and therefore you can't quite tell us where the growth will come from?
So, no, I mean, renewable is a great space to be in. We are lucky to be there now. But otherwise, yes, what I want to explain you is, if you're not getting projects in highway, we have a lot of verticals where we can get projects with our proper IRR and our EBITDA levels.
Okay.
Ramnik, the other aspect is in terms of your overall bid pipeline. 70,000 odd crores is what you're sitting on. What portion of it is renewable and what portion of it is the non-renewable pipeline right now? And to add to that, any other, and what's the pipeline looking like going ahead?
So, first of all, I'll just correct our bid pipeline, which we have already quoted projects are for 15,700 crores approximately.
Okay.
Every week we bid a lot of projects. As I said before, we just want to maintain our EBITDA levels and the project IRR at the developer level. So, we are fairly, in terms of the mix, highway would be around, which includes tunneling business, which includes elevated business, which includes the structure business, would be around 72 to 75%. The rest is other verticals.
And in terms of your net working capital days, they have been on a rise. It was 75 versus a 45 in FY24. What is the reason for that and the kind of impact you're seeing? Are you seeing that reversal happening soon?
So, before 24, there was an Atmanirbhar scheme by Government of India.
Okay.
So, Atmanirbhar was removed last year. So, what is the difference between Atmanirbhar and right now is, in Atmanirbhar, which was introduced during the COVID, we were paid for even 2% of the project. We do EPC projects, and EPC projects are paid as per the milestone payment. Now we have to achieve the proper milestone. And other aspect is, like, for example, we're doing a Danapur Beta project, which is a elevated road project. The land given to us still is around 80%. And we have to achieve that milestone completing 100%. So land is not available. So that amount, 70-80 crores, is stuck till the time land is available to us. We are continuously in touch with NHAI, requesting them to amend these. But, the department takes its own good pace of time. But otherwise, things are good. And other big aspect is, earlier with Atmanirbhar, no retention money was getting deducted in our bills. So if you see last balance sheet, it was around 95 crores. This year, with about 10-15% growth, you can imagine what kind of money will go into retention. But yes, otherwise, we're trying and pushing hard to get the payments as per the same old pattern. But yes, Atmanirbhar was a great support to everyone in the country.
Okay, so that's with regards to Ceigall. Thank you, Ramnik, so much for joining us on the show. Always a pleasure to speak to you as well. Let's just pull up the stock. Today is slightly under pressure. If we can just have a 6-month chart as well to see what the kind of, moves or, gains that a Ceigall has seen. Pretty volatile. I mean, it's seen its ups and downs, a marginal 2.5% uptick on this one. But moving on, with stocks that were down and how. One of the stocks, in fact, that was down and how. Casualty of the day, Man Industries, after SEBI issued an order barring Man Industries and its 3 top executives from assessing the securities markets for 2 years due to alleged fund diversion. Anushi joins us to take us through the details in terms of what went wrong and what was the clarification and key highlights from the management interaction.
Hiran, in fact, over the course of this day, we saw about a 17% of an intraday low. From there on, we saw some bit of that recovery coming in, and again, a bit of a fall after that. So it's been quite a volatile day for Man Industries, and deservedly, because of a couple of reasons that we are looking at. Now, what has happened is SEBI has banned Man Industries. Along with that, they've also banned Chairman, MD, and the ex-finance also for a period of 2 years from security markets. And this is over the alleged claims of what's happening with the Merino shelters, failing to consolidate the financials of this particular unit that we are looking at from the period of FY15 to 21. After that, they started consolidating the financials, but this was one of the major reasons why we are seeing the SEBI order in place. In fact, they also said that they have misrepresented related party transactions. Along with that, they were engaged in round-tripping of funds as well. This was to hide the true financials. Now, this is via the subsidiary subsidiaries that we are looking at in terms of the claims that have been said, and penalty of rupees 25 lakh has been imposed. However, if you look at the management's commentary on this type of SEBI action that we are seeing in place, the primary issue is related to non-consolidation of ARM, and this is a legacy issue which was seen. So post FY21, they did start seeing consolidation of this, and these issues are mainly historical in nature. Along with that, they are now looking for legal routes in terms of this SEBI order coming in place, while they do not see any impact in terms of financials, considering it's a 25 lakh of a penalty. The main emphasis should be on how the future fundraising plan should be. But we spoke to the management earlier today, and this is what they had to say in terms of what's happening with the related party transactions, in terms of why this kind of SEBI order has come in place. So let's listen into that as well.
Obviously, it concerns when the order is, though there is no financial impact on the company, the shareholders, it concerns, and that's why we are here to clarify and to give a clarification that it doesn't impact the company's day-to-day workings. It doesn't impact our growth plans. It is of the past of 2015 to 21. The compliance since then we have been up to date. We haven't got any compliance issues since 2021 till date. And we are keeping monitoring very, very close, and all the related party or any we have stopped completely since 2021. And this is to, interest more shareholders, and which we have seen over the last 2 years, with where we have reached from where we were. Today we are, the order book is the strongest, which was never been the case. We were always trading between 1,000, 15, 2,000 crores of top line. And today we have a 5,000 crore order book already in line. We have managed to, remove the assets which were not performing and generate that income as well into the company. And looking forward also, we will be doing the same. So yes, obviously this affects us, but it has been a long time overhang for the company as well. And by paying 25 lakhs and getting this matter disposed of and getting it over and done with, we can look forward now positively. So I think it was to be done someday or the other. It's happened today. It was supposed to happen someday. And yes, we will fight for our legal rights wherever we feel the order is not in our favor, and we will do the needful.
Okay, so that's the management of Man Industries giving out his side of the story. But when this gets challenged further, that's when we have to see what happens. Currently, the stock continues to trade under pressure. Kush, any view with regards to Man Industries? What are charts indicating for this one? And a quick view with regards to the PSU Bank Index as well, which is trading at the day's highest levels. So ahead of the RBI policy tomorrow, any bets that you would have?
So, first up on Man Industries, I think 360 is a strong support zone, while the stock had dipped fairly deep, to 340 levels. Also happened to be the 200-day moving average. It's rebounded mildly from there. Right now, if you have a position, I would suggest a hold with the stop loss at the day low close to the 340 mark. But if you don't, I wouldn't suggest a fresh entry. The first day of a big sell-off after the news that has come out, you want to see how the subsequent days pan out. So yes, a wait and watch. If you have, you could continue to hold with the stop loss of the day low, as I mentioned. And you're right, as I mentioned in the start of the show, right? PSU banks continue to be the rank outperformers. It's not a bad idea to still trade them. The reason I have this confidence is because if you look at some of these names, Canara Bank, PNB, Indian Bank, the call that we just gave, Bank of India, they are not only up, they are up on the back of fairly healthy volumes, which means the market still has belief that there is room on the upside. Now, the recent highs that some of these has made, for example, a Canara Bank close to the 125 mark, I think that could well be taken out in this rally, and the stock could head to 128, 131 kind of levels. PNB also a strong move and a strong run that we've seen recently. So first target would be 115, the recent swing high. Once that is taken out, 118. And Indian Bank, the stock that we've just discussed as a call, just to reiterate the levels on that, 750, 765 on the upside and 725 being your stop loss. This is one pocket that I could, I would still be long on. You could take your pick amongst the names that we just discussed.
Right. So that's with regards to Indian Bank. You've been talking about it, 2.7% up move on that one as well. But we'll quickly slip into a short break. Stay tuned to NDTV Profit. Up next, we'll bring you all the chatter behind the dealing rooms in our segment Heard on the Street. Please stay tuned.
the world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी बने।
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
And NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है।
अरे और रहमान
सोनू निगम के लिए जोरदार तालियां।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily lives. We aren't talking about time travel yet.
Gadgets tested under extreme conditions.
But why? I review tech for people like you and me. You know what? Let me take it from here.
All right.
Tech isn't that complicated. In fact, it's about making our lives simpler, better, and more fun. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं the best app to use is the NDTV app.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Welcome back. You're watching India Market Close on NDTV Profit. Let me get in Avinash Guraksakar as well. Avinash, welcome to the show. Clearly, this is a day where probably we could be ending lower for the 8th consecutive session, but the markets are trying to protect that as well. Been a year since we hit a record high in terms of Nifty 50. And from there, we're down nearly 6%. A lot of factors that we're watching out for right now. Taking the RBI policy, which is slated tomorrow, a lot of other factors that the street is eyeing. Anything that you would recommend as your top pick in that last hour of trade?
Yeah, I think good afternoon, Hiral. See, I think clearly, from the automotive space, we like, frontline companies like Mahindra and Mahindra. I think in a volatile market like this, it pays good kind of dividends to actually bet on something which I believe the second quarter and the rest of the financial year is going to be extremely strong. Most importantly, the tractor business is likely to record double-digit growth. The utility vehicle business is doing well. Their electric vehicles, business is also doing extremely well. So my sense is that at these levels, this could be a good defensive bet and a very kind of a growth bet also, considering the GST cuts which have been announced. So M&M is our top pick in the automotive sector, and the other stock from the hospitality space is Indian Hotels. We have been seeing that this stock has been consolidating for a very long time, around 720, 723. Another trigger for the stock is for Indian Hotels is that their New York property is likely to be sold off very soon. And if that happens, that could possibly cut down losses because that is not a profit-making entity. But overall, I think we expect a very strong growth trajectory, not only in the second quarter, but for the full financial year, considering that room rentals, the average RRRs have gone up, supply crunch still continues, and we could be looking at a profit of 2,400 crores compared to 2,000 crores last year. So this could also be a good bet, in a market like this where capital is protected and it gives a sufficient room for growth going forward.
Okay, so that's with regards to where the top picks go. Very quickly, can I just pull up a KPIT Technologies that is seeing some sudden pressure, 7.5 to 8% downtick coming in on a KPIT Technologies, now a 9% downtick. Kush, a quick view with regards to KPIT Technologies.
A very sudden move, you rightly said. 1180 is a good support zone that was being held on to for some time. It was attempting a rebound, but I think it's given way now. With the kind of volumes that you're looking at, I think you should be considering the next support zone, which comes close to about 1055, and if that is taken out, the recent low of 1010, could well come into the picture. I wouldn't really, be very adventurous and look for a long trade here. Key support zones broken after a fair degree of consolidation on the back of strong volumes. The downward momentum still persists.
Downward momentum could persist. Neeraj, this is an interesting move that you're seeing on a KPIT Technologies in today's session. 8.5% downtick coming in on this one. It's a sudden move in the last couple of minutes.
Yeah, I think the talk doing the round, Hiral, when it comes to KPIT is that the Q2 number could be weak with organic revenue declining about 2% quarter on quarter versus earlier expectation of a 3% quarter on quarter growth. So that's about a
Dixon story.
Yeah, so that's about a 5% deviation from what was anticipated earlier, and lower contribution from acquired entities versus expectations of a full quarter consolidation. So I think the belief is that the top line support will come in from cross-currency tailwinds. Had those not been there, then the numbers could have looked even weaker. So I think this is the talk doing the rounds, which is why this very sharp gash now at 8.5%. And I dare say it may not be the end of it.
Absolutely, may not be the end of it. I think that's something which we need to pull up during the show as well. But moving on, the DGC has granted aerodrome license to Navi Mumbai International Airport. My colleague Danish Anand joins us with more. Danish, what are you picking up?
Well, in a major development, the DGCA, which is a civil aviation regulator, it has granted the aerodrome license to the Navi Mumbai International Airport. So now the license is granted after the regulator is satisfied with the basic protocols that the airport should have. And now we know that soon the airport will be inaugurated by the PM. So before that, this aerodrome license was an important step before which the official launch can happen. And in the next coming few days, we will see flights taking off from the Navi Mumbai International Airport. There will be more calibration flights that will be taking place. There will be a lot of test flights that will be taking place. So as of now, Air India Group has also announced its plans to start flights from the Navi Mumbai International Airport, and so has Akasa in the past talked about starting flights. So we can expect a major, kind of a positive development for Maharashtra as a whole, for the Maharashtra's aviation sector. And as far as Mumbai's aviation sector is concerned, the city is all set to get relief with an additional airport coming up.
Okay, so that's with regards to where the Navi Mumbai International Airport goes where they've got the aerodrome license, which is an absolute key milestone that they have crossed as well. But moving on, let's talk about more stocks that are buzzing in trade and must make it to your watch list today. Varsha has got it on hers. Varsha, what are you picking up for the viewers?
Well, thank you so much for that. Let me start with the paper stocks, which are buzzing. You have Emami, Paper Mills, JK Paper and West Coast. Now, DGTR has announced an anti-dumping duties on paper boards, which are being, the duties which are being originated from China or Chile. So, because of this, all the paper stocks are buzzing as of today. Then we have Tata Investment Corp, wherein if you see the stock buzz is led by upcoming Tata Capital IPO, which is in next week, and the stock is up almost 18% over the last 3 trading sessions. And company has recently announced 1:10 stock split, which is its first such action. Last on the list is Dixon Tech, wherein if you see yesterday there was a news wherein Trump is planning to impose tariffs on foreign electronic device, and for Dixon, if you see, US contributes almost 4 to 5% of the total sales, and exports are expected to increase at 16%. Now, on the same, if you see, Goldman Sachs is expecting 4% quarter-on-quarter growth when it comes to mobile and EMS division versus 15% growth guidance which has been given by Q2. So this is the reason why Dixon Tech is under pressure. So these are all the 3 stocks which are which are on the news as of today.
Thanks a lot for that, Varsha. Now, Avinash, coming on this one, coming on Dixon. The thing is this, that Goldman has put out this, set the cat amongst the pigeons, that the number would be low single digits. What if the actual number could be higher, let's say 10-12%? The stock got smashed yesterday because of those tariff conversations, now some more today. Is this giving an opportunity?
So I think, Neeraj, my sense is that if the numbers are slightly better than expectation, then you could definitely expect a bounce back on the stock. And I think, this company has been bettering its numbers quarter on quarter. And I think despite the fact that the stock has jumped significantly, I think the markets are still looking at a significant kind of runway ahead. So my sense is, yes, there could be a little bit of uncertainty now, but once the September quarter number come out, the management gives out its commentary, and obviously, what goes with the management, I think what kind of growth numbers they, spell out is going to be closely monitored by the markets. I think there's no doubt the stock is valuation-wise fair to expensive, but I think one needs to take a very long-term view, at least the next couple of years, if one takes a positional call at these levels. So I think, the structural story still continues to be positive, but I think if at all there are some slow quarters, then I think the stock could remain under pressure. We'll have to wait for the Q2 numbers and the commentary and then take a call.
Got it. That's Dixon Technology. Kush, Tata Investment, Dixon Technologies, and you're talking about 2 to 3 of these paper stocks which are buzzing in trade as well in today's session. Anything that comes to your radar that could be either a buy or a sell call?
Honestly, all the stocks that you've mentioned are mostly an avoid category, and for very different reasons. See, paper stocks, they generally move when you've got some sort of a news or another, and then they give way. And I don't know anyone who's made big money in paper stocks per se, trading or investing otherwise, right? So I would actually probably take this opportunity to exit if I had any positions in something like a JK Paper, a West Coast. Some of these names have moved, but haven't really given a sustainable big up move, in a while. So yes, take this opportunity as an exit. Tata Investment was on my radar for some time, but the move is just too high, too fast, and now it's hit overheated territories. So from the current level, it makes no sense to enter. But if you had a position, then yes, with the stop loss around the 9,700, 9,800 zone, you could continue to hold on because this momentum could take the stock higher, but definitely not worth investing right now. The most interesting name is Dixon, because yes, it's fallen quite sharply. It is coming to an accumulation zone, and I'll give you a broad band, which is 15,300 to about 15,900. That's the zone where you could look to accumulate. The 50% and the 61.8% retracement, of the current rally comes in at that zone. 200-day moving average also happens to fall in that zone. So maybe if there is some more downside, Dixon could be an interesting pick. But with 3 days of big gashes, on the back of good volumes, perhaps the downward momentum could still continue. So within the 15,300 to 15,900 range, Dixon could make an interesting, buy, but maybe not at the current juncture. You want this fall to settle first.
So wait for some correction to happen on a Dixon Technologies to accumulate. And you have a Tata investment also, which is absolutely heated right now. But moving on to our bull versus bear segment today, we put the spotlight on Coforge. It's an interesting play because it's one of the most expensive mid-cap IT companies. We have my colleague Jasmeet, who's getting us all the details in terms of what are the bull and the bear cases for this one. And then we'll leave it to Avinash to decide which one he would go in for. Over to you, Jasmeet.
Well, right, thank you for that. Let's quickly go through and understand the bull and the bear case for Coforge. While starting off, the bull case would be the management guides a 14% EBIT in FY26. If we look at the guidance and the margin for FY25, they stand at 13%, and management plans to reach an 18% guidance by FY27. So on the way, they're guiding a 14% EBIT by FY26. If we look at the bear case, we have a lot of transitional happening. That's AI transition, which will create pressure on the margins. And we also have H1B. We have tariff and uncertainty weighing in the bear case. If we look at the other aspect, Morgan Stanley says the revenue margin trends are steady for Q2 and H2 going forward. But on the other hand, we also have CLS's view, which says they're still weak disparity when it comes to the BFSI segment and the travel segment as well. Well, if we look at the third scenario, we see that the company has created its niche positioning under the new CEO of that Sukhbir Singh. But given that there is no promoter in the company, it creates more pressure on the CEO, and that's the bear case. Going ahead, let's understand the last aspect of it. Well, as we see the bull cases, Morgan Stanley and CLSA have weighed in positive stands. They have given overweight with an upside of probably 50%. On the other hand, we also see that it's the most expensive among the mid-caps, as given the valuations are high compared to all the mid-cap IT firms. Now, let's quickly understand the ANR and what does analysts recommend for this particular stock. If we look at the buy rating, they're currently at 28, while the hold is at 4 and sell at 7. And the potential of the return that the stock can give going forward is at 18.3%. So this is a complete breakdown of Coforge.
Interesting. Thanks a lot for that, Jasmeet. And, we'll get in Somit in a few minutes from now to just try and understand if mid-cap IT names come up in the list of dealing room conversations or no. But that analysis by Jasmeet of why Coforge is being preferred by some brokers is interesting. Avinash, expensive name, IT is not a sector which is in favor. Is Coforge a name that could find favor with you? Why or why not?
No, I think, Neeraj, valuations don't give us the kind of comfort. If you ask me, typically at these levels, the risk reward is not very
Avinash, just allow me to come to you. I think we just lost your feed. We'll try and reconnect that. Kush Bora, can I just bring you in on that Coforge conversation meanwhile and understand from you, is there a trade here?
There is, and if you recall, Neeraj, Coforge has been on my buy list for some time among the IT names. Positive divergence on the RSI daily setup. There was a sharp gash along with the other IT names, but that was on fairly low volumes. Today, the stock is up on good volumes. I think the risk-reward ratio is extremely favorable. Keep a stop loss near the 1530 mark, which was the recent low. Once that is taken out on the upside, we're looking at 1650 and 1725 as the immediate targets. So yes, if I were to pick a couple of names in this space, Coforge would be one of them. The other one would be Infosys, and I'm also monitoring Emphasis. Not just turned into a buy call after the fall it had, but any positive uptick, and perhaps we'd be discussing that as well.
Avinash, how are you placing it? Because Coforge is one of the most expensive stocks as well, but there are positive notes that are coming on this one. Would you go in for a Coforge or something else would fit your bill from mid-cap IT?
No, I think mid-cap IT, Hiral, we were positive on KPIT, but I think today some, significant fall has come in. But my sense is that Persistent and KPIT are stronger bets in this, segment. I think Coforge, we would not be comfortable considering the valuations which currently the stock trades. So our sense is that we'll wait for the Q2 numbers and the commentary. I think any letdown in the numbers could possibly lead to a bigger sell-off. So I think it's better to stay away. We would be more comfortable with Persistent and KPIT. And I think the overall IT segment, even the large cap companies like Infosys looks better. I think in a volatile market like this, IT provides a good defensive kind of, place where I think earnings could be steady. And I think, the cash flows are pretty strong. And plus, they have announced a buyback at 1,800 rupees. So that also gives a kind of a comfort to the investor. So I think Infosys looks pretty attractive even at these levels.
So that's with regards to where Infosys go, and we've spoken about mid-cap IT by large. But now it's that time of the show where we talk about all the chatter that's happening in the dealing room. My colleague Samit Sarkar joins us with all the details. Samit, clearly, if you see in terms of what's happening in the markets, we are down nearly 6% from record high levels, which was exactly a year back.
Right.
No major moves coming in here. The markets are trying to protect from getting into that 8th consecutive session of a negative close. What is the dealing room telling you, and any action you're seeing in individual stocks?
Even if we close in green, it will be considered as an 8th consecutive day of loss because we are down from the day's highest point. In fact, at one point of time, we were touching that crucial support zone of 24,600. But we have seen strong support coming in at that level of 24,600, and hopefully that will be that trend should continue going forward. But when it comes to stock-specific action, Bajaj Healthcare, firstly on the cash side, is what dealers are saying that there are buy flows on large HNI desk at lower levels in trade. They're expecting some positive announcement to come in soon for this counter. For Vinati Organics, if you look at smart large HNIs and PMS have started to accumulate this counter at lower level, is what dealers have indicated. When it comes to Persistent Tech and KPIT Tech, there are sell flows on large HNI desk in both these counters. For Persistent Tech, for Persistent Tech, in fact, they're not saying that the numbers will be weak, but what they're saying is that despite the growth that the company might report in the second quarter of FY26, they might have to revise their guidance downwards because they won't be able to meet the guidance that the company had given earlier. So that is the negative pressure coming in for Persistent Tech. And when it comes to KPIT Tech, that stock is down 10% in trade. And what dealers are indicating for this counter is that the second quarter numbers could be on the weaker side for this counter, and this is because a lot of investor relations have started to speak to analysts to give some idea about how the Q2 was, and post that we are seeing this kind of a down move when it comes to KPIT Tech in trade today. When it comes to Dixon Tech, that stock is down in trade largely because Goldman Sachs came out with their preview note which indicated that mobile segment growth will be just 4% as against the management guidance of 15%. Hence that stock had opened lower, but what dealers are indicating that there are strong buy flows coming in at lower levels when it comes to Dixon Tech, and they're expecting that the growth number will not be as bad as this number that Goldman Sachs report has is saying of 4%. When it comes to Jubilant Foodwork, there are sell flows on large HNI desk. Q2 again is expected to be weak for Jubilant Food. And lastly, when it comes to Eicher Motors, there are buy flows at lower levels on PMS desk. That stock, in fact, is up now 2%. It was flat when I was speaking, I spoke to the dealer about this counter, but now that stock is up. It's flat. It's 0.3% up, Eicher Motors. And dealers are indicating that there are buy flows on PMS desk. And dealers expect that the September month sales number could be much better than what the street is anticipating. Even after the last 5 days of strong number, what the street is anticipating the number could be. In fact, Nomura estimates is close to 134, 135,000 number. The actual number could be much better than that is what dealers are indicating.
Wow. Okay, so here one more point on Dixon that Samit mentioned, that the numbers may not be as low as Goldman is suggesting, and which is the point that I think we are trying to do with Avinash Kudakshekhar as well.
And a KPIT Tech as well, you know, another aspect that's coming in where you are seeing sell flows.
Okay, Avinash is back with us, and Avinash, you want to come in on the KPIT point?
Yeah, I think, Neeraj, my sense is, this seems to be an overreaction. I think we have to wait for the Q2 numbers, but I think, this kind of sell-off, I think, looks to be a little far too, kind of negative. I don't think that, any major negative surprise could come in. But obviously, I think if there is a letdown in the earnings growth or letdown in the order wins, I think margin pressure, then I think the stock could come off. But I think we'll probably wait for the numbers. This kind of fall seems to be more of a scare that something very bad is going to be reported, which looks very unlikely. So we prefer to wait and watch. And I think we should, our suggestion to all the investors is that don't panic as of now. I think things may not be as bad as what they are projected.
Okay, the scare, as Avinash is mentioning, is what you're looking at in terms of where KPIT Tech goes. In fact, where from here is going to be the key question that one should be watching out for. Kush, let me come to you with regards to, a few of the other names that are seeing pressure. You have the pharma pack and the consumption pack, which is down in trade. Let's talk about consumption. At the current levels, the way consumption stocks are panning out, are you seeing any opportunities emerge over there, and likewise with regards to pharmaceuticals as well?
So, Hiral, I think the profit booking round was equally sharp in the FMCG names. You're starting to see some sort of a move, but I'll tell you what, the moves that you see, on the expiry day, perhaps even the expiry week, is often the reverse of what's happened, in the recent past or throughout the month. So I would read a lot of these moves that you're seeing on, the FMCG names, which are showing a mild uptick as rollover activities and, short covering activities, just because it's the monthly expiry. Not very constructive, because the fall on these, even in the recent days, after falling about anywhere from, 8 to 10 to 15%, has been fairly sharp and on the back of good volumes. So I would wait and watch on a lot of these FMCG names. Wait for the price action to start stabilizing, taking out key levels, and then perhaps consider. I am tracking Britannia and Tata Consumer from a long perspective, but mind you, this is just tracking. This hasn't turned into a call, because while there is the initial green shoot, I still need some more confirmation on the upside for some of these to be turned into a call. As far as the pharma pack goes, yes, I mean, they've been muted, and we all know the reason why. Everything's happened outside of the country. But the fall here also seems to be quite exaggerated. Right now, it's more of a recovery attempt, more of a short covering trade. Hasn't really turned into a long trade. So I would wait and watch on some of these names as well.
Wait and watch with regards to consumption, as well as Pharma, Britannia and Tata Consumer. Both of these are on Kush's radar. Let's quickly slip into a short break. On the other side, we'll get you the top bite today and sell tomorrow picks as well. Stay tuned to NDTV Profit.
The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी बने।
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
And NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है।
अरे और रहमान
सोनू निगम के लिए जोरदार तालियां।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily lives. We aren't talking about time travel yet.
Gadgets tested under extreme conditions.
But why? I review tech for people like you and me. You know what? Let me take it from here.
All right.
Tech isn't that complicated. In fact, it's about making our lives simpler, better, and more fun. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Welcome back to India Market Close. Thyrocare is undergoing a strategic transformation under API Holdings with debt refinancing easing, promoter pledge pressure easing as well, and it is signaling financial discipline. We spoke to Rahul Guha, MD and CEO of Thyrocare Tech and the MD and CEO of API Holdings about this. Listen in.
My first question, Mr. Guha, will be the API Holdings have refinanced old high-cost debt with new one with a lower interest. How much interest savings, do you expect from this refinancing on an annual basis?
Sure. Firstly, the original debt was at a very high cost. So our primary objective was to refinance the debt as soon as possible and, bring the debt down to a sustainable interest cost. It's difficult to share specifics on the interest rate and all of that, but what I will share is the debt is substantially lower than our previous debt, which was, had a dollar exposure as well. And I can say that the current debt is almost 40% lower cost versus our previous debt, and we'll save almost 100 crores per annum in interest costs thanks to the refinancing.
Understood. And also, Mr. Guha, the pledge will be, the pledge has been reduced from 71% to 61%. What is the planned timeline to, further reduce the promoter pledge?
Sure. We have about 1,700 crores of debt on the balance sheet at API against which Thyrocare shares are pledged. We are very clear that by the end of this year, we want to get the debt down to sustainable levels, and we're working very hard towards that. And I'm sure, while not making any commitment, but we are very actively working on reducing the pledge over the next 12 months.
Understood. And onto the operational or business highlights. In AGM, you had said that the non-core business are being exited. How will this impact overall revenue for Thyrocare?
So, see, Thyrocare is doing very, very well. Our primary focus has been to ensure that the momentum that we have built in Thyrocare over the last 3 years continues, right? The results are there to see already, right? We have the highest test volume in the country by far, industry-leading growth, much higher than our peers, both in terms of volume as well as revenue. The best quality footprint in the country with 100% NABL, us being the only chain in the country that every single lab is NABL accredited. And the growth is coming through with confidence from our franchise base, our partnerships base, and the business is doing very well, right? We were, in fact, the first company to reduce rates after the GST announcement and ensuring that the benefit is passed on to the customer. And we just want to ensure that this momentum at Thyrocare continues. So in no way is Thyrocare a non-strategic asset. In fact, it's, one of the most valuable parts of the group, having seen the share rally from 450 levels to where it is today. It's created outsized value for the group as well. And we are looking at different options to think about monetizing and bringing our debt down to sustainable levels.
Okay, so the plan is to bring down debt substantially. 1,700 odd crores is what is sitting on the balance sheet of Thyrocare on the back of the interaction right now as well. You're seeing a strong recovery that's coming in with regards to Thyrocare, still in the negative, but at the day's highest levels as we speak. In fact, another company which is buzzing in trade today, to whom NDTV Profit did speak to as well, is Shalby. Now, what the management has indicated is that they're expecting the unit economics of Sanar to improve from here on. Now, margins for the hospital business is expected to be in that 20 to 23% range in FY26. And the implant business that has been trading under pressure, that is expected to be EBITDA break even after a couple of quarters. And if you see the stock as well, which is seeing gains of little over 5.5% from the healthcare industry. So both the counters, Thyrocare and Shalby, that one should be watching out for. Avinash, two different segments from the healthcare space. Your views?
think looking at what the management of Thyrocare mentioned, if there is indeed a savings of 100 crores per annum, I think that is going to definitely boost up the bottom line quite significantly. Of course, the stock has got re-rated significantly, but I think within the diagnostic space, things have come back to normal. I think volumes are growing quite heavily, and most importantly, Thyrocare is a well-established brand. It's one of the older brands in this market. So I think hopefully the second half of this financial year should be good and FY27 should be much better. As far as Shalby is concerned, I think, their overseas business is now going to take off. I think very clearly within the domestic hospital space, they managed to have a very, very good kind of geographical kind of penetration. Overall, I think looking at the kind of growth in the hospital business and the overseas export opportunity, I think definitely at these levels also Shalby can be a good investment bet if one takes the next 12 to 18 months in time. So I think Shalby looks more attractive as compared to Thyrocare, but I think you need to give in a slightly longer time frame. Earnings will definitely get a leg up in the third and the fourth quarter.
Okay.
You know, the other piece, Hiral, and just Hindustan Zinc, and I know we're going to talk about it in great detail later on, but just the fact that the stock is trading at the highest point of the day now, 3.56% higher, 483 and counting. Really strong moves by HZL, and purely because of silver pricing. And we'll talk about it in detail, but prima facie, it is just this, that with silver prices doing what they are doing, and with Hindustan Zinc having nearly 40% of its revenue, of its profitability in quarter one from silver, I think it is benefiting out of that. 483, 3.68% of Aditya Agarwala. Would you trade it now? Is it looking strong for further gains?
Good afternoon, Neeraj. Thanks for having the show. There is definitely some more room on the upside. I won't rule that out, but one has to be very careful and watchful if you're looking to go long on Hindustan Zinc, because this has a tendency to disappoint every time long trade is initiated in this counter. On the upside, I see levels of 500 to 520. Definitely, if one is looking to buy at current levels, place a stop loss somewhere around 472 to about 475 on the downside. And it's building onto the gains, which is no doubt about that. And this gains is backed by healthy volumes. So my sense is this up move is likely to continue at least for a few more trading sessions. So definitely you can take a long trade, but one has to be a little careful and watchful when you're going long in this stock.
Okay, so that's with regards to metal names. In fact, Aditya, what would your picks and strategies be?
So I've got a couple of buy recommendations here. Good afternoon. One is from the banking space, because we're clearly seeing PSU lot outperforming big time, and this is likely to continue. My sense is Bank of Baroda is something which is looking quite interesting to me on the chart setup. It's a fresh breakout from a consolidation on the back of healthy volumes. So for a target of 275 on the upside with a stop loss at 255 on the downside, I would recommend a Bank of Baroda first. Second stock on my radar is BHEL. This is also one stock which is looking quite interesting and has been slowly building on to its gain from the morning trade. So I think there is more room on the upside as far as BHEL is concerned. So for a target of 260 on the upside and a stop loss at 233 on the downside, I would recommend a fresh long in BHEL as well.
Okay, so that's with regards to a buy call coming in on BHEL. In fact, Bank of Baroda, which was also positive on this counter when we were talking about, plays that could be looked at ahead of the RBI policy meeting tomorrow. But moving on, Trent, that's an interesting play. Let's pull up that one on the screens because it's Nifty's worst performer since the time it has got added to Nifty 50 as well. Year to date, it's lost nearly, I think, 43% since index inclusion. In fact, the relative strength index is below 30, which is actually signaling oversold conditions. And the analysts are yet bullish on the counter, citing a 20 to 25% sales growth. We did speak to, Jignanshu from Bernstein. Let's quickly listen in to what he had to say.
I think there were three simple reasons why the problem for Trent from a stock price perspective began. The first was on its revenue growth numbers, which were completely burdened by the expectations. The expectations were to continue a 40-50% growth rate for a while, and that has crashed from 100% to 50% to 40% to now 20%. That's from number one. Number two, the lead indicator for their growth was store additions. And over the last 2 quarters, the number of stores that they've added has also been materially lower, which has dampened expectations for the future. Number 3 is the lookalikes similar to Zudio, which have come up in their micro markets where Zudio has strengths. So that gives the impact of competition, and that all three put together create a narrative challenge for Trent as well. So I think those are the 3 narratives which have turned the tide for Trent after its inclusion in Nifty last year.
Okay, so that's the view coming in from Jignanshu Gore. He's expecting around 6,000, 6,200 on this counter. Aditya, what are charts indicating to you? I mean, the next target that you would be tracking from a 4,700 right now?
It's looking weak, Hiral. There's no doubt about that. And that stock has been constantly making lower lows, lower highs after it had broken down from that key support area of 6,200. Immediate supports on the downside now are close to about 4,500 to about 4,450 on the downside. If the stock manages to consolidate around these areas of 4,500, 4,450, then I would be interested in going long on Trent, and that too in a staggered manner. Right now, there is no momentum on the upside. Rather, on the downside, we are seeing correction on an every single day. So I would wait it out for the stock to actually form a proper base around these areas of 4,450, 4,500, and then look at a staggered buying in the stock for maybe a potential target of 5,000 plus.
Recovery in Saan Capital is looking very, very interesting. So look at the intraday of Saan Capital today, and you will see that recovery from the intraday lows. Sharp spike up back to 160, 161, and it's a stock that's rallied quite a bit. Today too is rallying on significantly high volumes. Now, there is a corporate event at hand as well, and we don't quite know the outcome of that one. But so from a trade perspective, Aditya, is there more steam? Would you ride this up move that you're seeing in Saan Capital, or would you book profits here?
No, definitely I would want to ride it, just that it's under a ban phase, so you can't take an F&O trade in this. But yeah, apart from that, this definitely looks very strong to me on the chart setup, and this up move is likely to continue if you're buying in the cash and want to hold on to it for some time. My sense is the stock can easily test levels of 190 to about 200 on the upside. And the volumes are, if anything, volumes do suggest that this up move is likely to continue. On the downside, 150, 145 are very strong support zones.
Avinash, do you like Saan? There are changes afoot. There is obviously some bit of corporate action that has been announced as well. You would have looked at all of that. Do you like Saan as an investment candidate, or are there other NBFCs that you may like?
No, I think clearly, at these levels, the risk reward looks pretty good, Neeraj. I think if one were to take the next 12 months, I think whatever negatives were there have been factored into the price. We have been also telling our clients to accumulate this slowly, but I think the kind of volatility we have seen in the last few days is quite surprising. I think we would like to have a little more clarity on what the commentary from the management is. But I think Q2 numbers and the rest of the second half of FY26 is going to be significantly better than the first half. So we have a structurally positive view. We would suggest that one could accumulate here slowly for a reasonably good risk reward over the next, say, 12 to 15 months.
Lot of stocks buzzing around. By the way, just before I get in, Anushi, some of the chemical linked names. So Indo-Borax Chemicals has zoomed in trade. India Glycols, I believe, has zoomed in trade as well. So spikes there. There's a stock called Stallion India Fluoro. I had not heard of a name until now, but that stock seemingly has had a big move upwards. So look at some of those moves there. Quite stunning, really. And while I highlight the chemical space, Anushi's looked at the entire broader market space, and she brings us some of these key buzzing stocks for the afternoon. Anushi.
Hi, afternoon, Neeraj. So in addition to that, what we are seeing is, paper companies which are buzzing in trade. But apart from that, a couple of counters in the small cap space which stood out as well. This includes the likes of Praj. Now, the stock is up, in fact, more than 7% in trade today. Now, even if you look at the trading volumes, they were around 3 times higher compared to its 20-day average. Now, just a bit about the company. This is in the hospitality business that we are looking at, especially in the luxury side of it. If we are seeing company planning to see an expansion for over 2,500 plus 6 rooms. This is across 65 locations that we are seeing by 2028. The second company in radar is IFGL Refract. Now, this company also saw about a 14% of an uptick in the last 5 trading sessions as well. In fact, if you look at today, it's over 18%. So this is the kind of an upside that we are seeing. Now, the company has a strong management outlook in place. It's seeing about a 15 to 20% of a revenue growth for the next 2 years. Along with that, it's what is also beneficial is the kind of margins we should be looking out for, considering that its high cost inventory is expected to be consumed by the second quarter end. So outlook post H2 would be something that we should be watching for. The third company on our radar is Bliss GVS Pharma. Now here the company, if we are looking at the key triggers, they have an established presence in terms of their positioning in Africa. In fact, it wants to deepen its presence over there. So that is something that we should be looking out for. International business, the company wants to expand on that field. Now, if you look at the 3-year CAGR growth in terms of how revenues have shaped up, we are just looking at a 3% of an uptick, so not bit of an excitement in terms of where the 3-year perspective is, while 44% is the kind of growth that we are looking in net profit. So these are some of these small cap names also which are buzzing in trade today.
Yep, strong moves there. Avinash, thanks Anushi for that. Avinash, do you track any of these?
No, I think Praveen looks interesting, Neeraj. I think the stock has been beaten down very badly from levels of almost 700-800 rupees. And I think now recently the company announced that a new resort at Adalaj in Gujarat has been operational. So I think you're going to see a much stronger second half. Typically, the second half is a period where business grows more significantly better. October to December and January to March are typically busy season months for the company. So our sense is that with the recovery in business and obviously with new resorts getting fully operational, you could see better numbers from Praveen. I think this is a debt-free business and a very high margin business. A lot of operating leverage present in the business. So I think we'll have to wait and watch how the scalability in the new resort happens.
Okay, so that's with regards to where Praveen goes. 6% up move is what you're already seeing right now in trade. But moving on. As silver shines, Hindustan Zinc is in the spotlight, as Neeraj has been pointing out since morning, with the kind of advantage a Hindustan Zinc would see on the back of silver prices. The white metal has been surging, driven by strong demand and supply deficits. Global peers are also seeing a re-rating. Valuation upside could be on the cards for this Indian player. Let me get in Vansh, who tracks this space pretty closely, to tell us more. Vansh, what are you picking up from where Neeraj left it on India Market Open today?
Well, yes, so as you rightly mentioned, the silver prices are already up 63% on a year-to-date basis. Now, if we talk about some of the reasons for this up move, it's firstly the industrial demand for electronics, the growing EV demand, and the demand for the solar cells as well. Moving on, we have strong demand in terms of supply deficits that we are seeing, and also the weakening US dollar. In fact, we have seen the US dollar index has already plunged about 10% in the past 8 months as well. Now, let's also look at the Hindustan Zinc, who is the key beneficiary of the rising silver prices. Now, the silver is basically a byproduction of zinc production for the company, and in fact, silver contributes about 20 to 25% of the revenues and 35 to 40% of their EBITDAs as well. Also, if you look at the revenue of Hindustan Zinc, now 88% of this revenue is a direct pass through to EBITDA, which signifies the margins that they are having in terms of silver as well. Let's also look at the sensitivity analysis now. A $1 per ounce move in the silver prices yields a 1% sensitivity for Hindustan Zinc as well. So clearly, any increase in the silver prices have a direct pass through to EBITDA of Hindustan Zinc as well. Now, let's also look at the performance of the global peers in terms of Hindustan Zinc. Now, what we have clearly seen that the Hindustan Zinc has consistently underperformed in terms of the global peers. We have clearly seen outperformance coming in from Fresnillo. Now, if we talk about this comparison, so Fresnillo is basically the largest primary producer of silver in terms of the global production. And also, if I talk about the Hindustan Zinc, now it clearly remained a laggard in terms of the production. And lastly, if I talk about the silver mining globally, now the Hindustan Zinc also has a production of about 22.5 million ounces of silver as well. Now, if we look at the detailed analysis of their annual production, now what we clearly see that Hindustan Zinc stands at about number 3 in terms of the global silver production. In fact, it is having a silver production of 22.5 million ounces as well. Now, moving on to the parent Vedanta. Now, Hindustan Zinc contributes about 40% to the Vedanta's consolidated EBITDA as well. So clearly, any rise in the silver prices will likely favor to Vedanta as well in terms of their EBITDA as well. So clearly the path looks, so clearly with the silver prices rising, the path looks very strong for Hindustan Zinc and Vedanta as well.
Okay, thanks Vansh. I mean, you did it much better than I did, so thank you for that. And therefore my question to Avinash Gorakhshekar now is, because Aditya has given his view on Hind Zinc. Avinash, do Hindustan Zinc or Vedanta become investment candidates because of this uptick in silver and of course the whole optimism around metals any which ways?
No, I think Hindustan Zinc definitely looks pretty attractive, Neeraj. I think clearly from an investment standpoint of view, as the silver prices go up, that is going to incrementally add to the bottom line for Hindustan Zinc, because as we all know, almost 35 to 40% of the EBITDA is coming from silver. Overall, I think, the second quarter is going to be good, but I think hopefully even if silver stabilizes at these levels, this year we could see a big bump up in the profitability for Hindustan Zinc. So definitely, I think at these levels, it's definitely a good investment case. If somebody has the 6 to 12 month kind of time frame, valuations will catch up, and I think markets will definitely give a further re-rating to the earnings growth, which actually comes from the higher silver price, prevalent as of now.
Okay, so that's with regards to where Hind Zinc goes, the stock at the day's highest levels. In fact, Aditya, let's look at your BTST calls.
So here I've got an NMDC that's looking quite interesting to me on the chart setup. I think one can actually look at a fresh long addition in BDST at current levels for a target of 83 with a stop loss at 73 on the downside.
NMDC 73 on the downside is what you should be looking out for. Stock also seeing a good surge in trade today. Let's quickly look at the auto pack in trade, because the September auto sales numbers that will be trickling in tomorrow with expectations pointing towards a positive trend across segments, and this will be largely driven by the recent GST cuts. Positive sales growth led by GST cuts, improvement in entry-level demand and export revival is what is anticipated with regards to two-wheelers. Four-wheelers, an improvement in the entry-level demand and inventory build-up is what you've seen with dealers, and that's what the commentary we got from M&M as well as Maruti managements as well. The commercial vehicle, the growth is going to come on the back of a favorable base, because we'd seen a 12% downtick on a year-on-year basis last year, and the pickup in execution of infra projects is what is going to aid the CV players from here on. And tractors, GST cuts as well as the positive rural customer sentiment is what will drive growth from here on. So that's with regards to where the auto pack goes. Aditya, anything that you would want to be a good call for the investors from this auto pack?
I'll stick to the two-wheeler names, and then especially domestic-led two-wheeler names. And the one stock that instantly clicks is Hero Moto, and that is one stock which has actually been surging off late. So I would be a buyer in Hero Moto from an investment perspective at current levels, and add further if it starts to trade beyond 5,500, and look for a target of 6,400 on the upside. This definitely is one stock which I believe has the potential to hit a new all-time high. So definitely Hero Moto is one stock that I'll pick from the auto space, and especially the two-wheeler names with a domestic focus.
Okay. I mean, at Hero Moto at the day's highest levels. Avinash, your views, what are your expectations with regards to the auto sales numbers that will trickle in tomorrow?
No, I think you could see very strong numbers from Maruti as well as from the two-wheeler majors. I think, TVS as well as Hero Motor, I think are bets which I think should definitely work for the investors, considering the fact that, the GST cut has been quite significant. And that is going to drive volumes already from the 22nd of September when the GST cuts became effective. I think you're going to see some, improvement in the last month's sales, but the real impact will be felt in the third quarter here. October to December would be a much better quarter in terms of volume growth.
By the way, KPIT Tech is now down 10%, and just goes to show that when. Okay, no, sorry. Just a bit of a recovery. It was down about 10%, 9.75%. I think it's just recovered a little bit, but effectively on that volumes, the stock is cracked and went below the 1,100 mark as well. Quite something out there. Okay, well, let's wait and watch. We've discussed about this in detail, so I won't spend time here. What we will spend time upon is, of course, what is it that the MPC commentary might be as well. So that is one thing we bring up. We also try and tell you what is it that you should do with the auto companies. Now, remember, Aditya has already said that Hero MotoCorp is something that he would like to buy. Avinash, the question though is this, that if two-wheeler sales and if four-wheeler sales are happening the way they are, or if air conditioner sales in North India have already equaled 100% of what the expectation was, what about the ancillaries supplying to them? What about the air conditioner EMS players? What about the auto ancillaries supplying to two-wheeler companies? Would you buy any company with that, from that bucket?
No, I think from the two-wheeler ancillary basket, Neeraj, you look at companies like Uno Minda, or for that reason, Lumax Industries. These are very large players to two-wheeler players. And most importantly, I think even from the bearing space, NRB Bearings is a company which caters largely to the two-wheeler segment. So I think these could be good bets, considering the fact that if volumes grow, then there's definitely good news for the auto component players, because that gives them a bigger volume kind of growth momentum. And I think these two, three companies definitely should do better. I think, but the real impact of this volume growth, my sense is, will be felt in the coming 2 quarters, because the GST cuts have come in just in the last week of September. So obviously October to December and Jan to March are going to be 2 better quarters for all these auto component players.
Your auto component makers in focus, Uno Minda, 1.5% up move coming in there. Very quickly, let's just pull up a Blue Dart as well as Aegis Logistics. Both of these counters were buzzing in trade. Blue Dart higher. It has cooled off, 3% up move on this one, and the Aegis Logistics, which is now at the day's highest levels, 4% upside on this one, on the back of the 10 to 12% price hikes that they will be taking from the 1st of January. Aditya, are you seeing any momentum play in on these logistic names?
Maybe an Aegis Logistic, Hiral, at max, if I'm looking at for a target of 900 on the upside, can be looked at. I would still avoid a Blue Dart because, like you also mentioned, stock has actually given up most of its gain from the top. And that is how the trajectory has been for the stock. The other stock which actually looks interesting to me is VRL Logistics from this space. Can be bought for a target of 320. So 2 stocks, Aegis Logistics and VRL Logistics. These are the 2 ones that I look at. Aegis for a target of 900 on the upside, and VRL for a target of 320 on the upside.
Okay, so that's with regards to the logistic players. Now, all eyes, as Neeraj was mentioning, are on RBI MPC outcome tomorrow. Policymakers widely expected to hold rates. My colleague Pallavi joins in with the key factors at play, including the lingering uncertainty around US-India trade deal. Yes, Pallavi, over to you.
Right, so benign inflation, better than estimated GDP growth in the previous quarter, but juxtaposed with significant H-1B visa changes, a weak rupee and continuing external uncertainty. What's changed from the last MPC to this one? Clearly, quite a lot. And what does this mean for MPC members as they take a decision on the benchmark lending rate tomorrow? It means that a rate cut is likely to be an extremely close call. Now, of the economists that NDTV Profit spoke to, about 2/3 expect a status quo on the repo rate, but at the same time, almost a third are batting for a 25 basis points rate cut. The stance is largely expected to continue to remain the same. So what are the factors that could push the MPC for cutting rates? The undershooting of inflation, the tariff overhang on growth, and the recent tightening in financial conditions that we have seen in the month of September. On the other hand, the other scenario that can play out is that the MPC might choose to adopt a wait and watch approach. It might look at waiting for a couple of months to see the impact of fiscal measures, most notably in recent times the GST cuts, any developments on the external front, its impact on the rupee, and this could mean that the decision to cut rates could be pushed to December instead. Still, there's enough to watch out for. What we're going to be watching out for tomorrow is whether the MPC and the RBI choose to change the inflation forecast, more in terms of the commitment to maintain adequate liquidity, and possibly, maybe, any targeted liquidity measures for export-oriented MSMEs hit by tariffs.
Okay. And it's arguably the most important thing, and Pallavi, of course, got us all the details of what's to be anticipated. I think this announcement and the commentary thereof would essentially be the key thing. As we start wrapping up the markets, take a moment to thank Avinash as well as Aditya for joining in today and giving us their thoughts. Really important to get their views today. And remember, viewers, as we wrap up the markets, keep in mind that banks have held fort even as the markets, even as the market largely have been extremely sluggish. And Hiral, as we wrap up, you have to argue that not too much of a disappointment.
Absolutely, too much of a disappointment. I don't know whether we should say that or not yet, but absolutely not the 8th consecutive session of losses so far, Neeraj. 24,636, we're still below that 24,650 mark. So yes, something pretty much on the expected lines. Bank Nifty, as Neeraj was mentioning, has held fort, and the outlier over here is the PSU Bank Index, which has actually ended at the day's highest levels. If you pull up the PSU Bank Index and see what's happening at that, and there you go. Smart moves on this one, 2% upside ahead of the RBI policy meet tomorrow. Let's quickly look at the heat map in terms of Nifty 50, and that will tell us the story. Hero Moto, top gainer, followed by Industan Bank, Adani Ports, Ultratech, JSW Steel, and Tata Motors. Strong moves on these ones with the Hindalco. ITC, Bajaj Finserv, Bharti, Tech Mahindra, Trent, Titan, RIL. Few names that were losing, but the breadth clearly is telling you that was in favor of the bulls. If you see in terms of India VIX as well, that actually receded and that's actually turned. We were seeing an uptick of around 2.5-3%. We were at levels of around 11.5 to 12. Now it's ended lower with cuts of around 3%. So this is an interesting move here. And as we know, it is expiry. Let's look at the sectoral heat map also and see what happened in terms of individual sectors. Top gainer, PSU Bank Index, followed by metals, auto sales numbers that will trickle in tomorrow. On the back of it, you're seeing some smart moves there. Media continues to be at the losing end, second or the third consecutive session ending in the negative. Consumer durables, real estate, FMCG consumption. So that's the pack where there has been weakness. Healthcare as well as pharma also witnessed good amount of weakness. Midcap and the small cap index, let's pull up that one because there was pressure, but a good recovery that has come in midcap 150 from the day's lows. We've ended flat but slightly in the positive. And if you look at the small cap 250 as well, a similar chart where we've ended in the positive after dipping into the red at the day's low. So that major recovery that has come in the last 15 to 20 minutes of trade. Let's look at BSE 500 as well to look at the broader markets. Tata Investment, 20% up move on that one on the back of the Tata Capital IPO. Nalco, Jyoti Laboratories, Bank of India, IIFL, Saan Capital ahead of the corporate action and good volumes that are being built on that one. JK Paper on the back of the anti-dumping that we are tracking. KPIT Tech also saw a smart recovery after dipping 10%. It's ending lower with cuts of 8%. Zydus Wellness, Godfrey Philip, Patanjali, Praj and Garware Tech were few of the top losers. But clearly, that muted move in the markets has continued. It is expiry. Volatility has remained high, and that you can see from the gyrations on the VIX as well, and the way the breadth has been moving on. Key events. RBI monetary policy as well as the Sensex monthly expiry today was the Nifty expiry. Apart from that, you have Vikran Engineering and Crystal Integrated. Both of these will see exit, shares that will be exiting the anchor lock-in tomorrow. And very lastly, on both these counters, whether there are moves or not is what we have to wait and watch and see. But completely out of time. With that, it's a wrap in this edition of India Market Close from Neeraj, the team that put this show together, and myself. Lots more lined up on the other side. Please stay tuned to NDTV Profit.
The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी बने।
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है।
सोनू निगम के लिए जोरदार तालियां।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily lives. We aren't talking about time travel yet.
Gadgets tested under extreme conditions.
But why? I review tech for people like you and me. You know what? Let me take it from here.
All right.
Tech isn't that complicated. In fact, it's about making our lives simpler, better, and more fun. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं। उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Hello and welcome. You're watching Market Express and I'm your host Himakshi Bahugna. Now let's get straight into the show. So viewers, benchmark indices have ended a volatile day of trade with a negative bias right ahead of the weekly F&O expiry. Now while the Nifty has ended 36 points above the 24,600 level, the 30-pack Sensex has wrapped the trading near 80,200 odd levels. Now Reliance, Bharti Airtel and ITC have contributed and dragged the Nifty by most points. Now on the sectoral front, the market posted a mixed performance. So metal and banking stocks have witnessed a sharp uptick. Realty, consumer durables and also media was seen under pressure. Now the advanced decline ratio has ended skewed in favor of the bears. Let's look at Man Industries, which has declined as much as 16% after a SEBI order barring the company and top executives for 2 years. Now, the company allegedly misrepresented related party transactions and also engaged in round-tripping of funds. Now, the company's MD says that they haven't faced any compliance issues since 2021 and they plan to appeal against this order. Also, the company expects to recover 600 to 700 crore rupees from its unit Merino Shelters. Also, we have courier giant Blue Dart is hiking the shipment prices by 9 to 12% from January 1st. Now, the move follows its yearly pricing practice. Now, customers signing up between October and December will be spared the hike. So, meanwhile, margins have dipped in Q1 after a steady FY25.
Next up, we have Allcargo Gati, which is raising prices by 10.2% for its express distribution services starting January 1st. Now, the hike aims to offset the rising cost and also infrastructure investments. On the financial front, the company expects 204 crore EBITDA in FY25 with a strong 20% CAGR growth projected through FY28. CLSA has initiated an outperform rating on Coforge with a target price of 2,346 rupees. Now, the brokerage cites strong leadership, domain expertise, and also a consulting-led approach driving growth. Now, Coforge earns 2/3 of its revenue from financial services and also travel. CLSA projects robust CAGR of 15% in revenue, 16% in EBIT, and 22% in EPS from FY26 to FY28. Morgan Stanley maintains its overweight rating on Coforge with a target of 1,880 rupees. Now, the firm expects that the stock to actually outperform the country index over the next 60 days. Now, it also sees stable revenue and margin trends in Q2. So, limited downside to EPS estimates and also potential for improved free cash flow margins and the re-rating. Kotak Securities have initiated an ad rating on Leela Palace with a target price of 475 rupees. Now, the brokerage sees a long runway for luxury growth and also backed by Leela's pure play focus on high-end hospitality in India. Strong earnings growth is also expected over the next 5 years, which is supported by favorable demand-supply dynamics. Axis Capital has initiated a buy on Leela Palace with a target price of 505 rupees. It also highlights Leela as India's only pure luxury hospitality player, expanding its own portfolio. Now, growth will be led by owned palaces and also same-store RevPAR. Now, strong financials are also expected with revenue and EBITDA CAGRs of 14% and 15% over FY25 to 28. Tata Steel's green ambitions hit a cautious note today as Citi reiterated its sell rating with a target price of just 145 rupee per share. Now, the call comes amid Tata Steel signing a non-binding letter of intent with the Dutch government for a massive decarbonization push. Now, Citi has warned that the Dutch transition is far trickier, demanding a larger setup and also a tripartite pact involving unions and also locals. Now, unlike the smoother UK deal backed by £500 million, Tata stock has dipped amid broader steel sector woes, including the rising input cost and also global oversupply. Polycab India has gotten a big vote of confidence from Citi. Now, the brokerage maintains its buy rating with a target price of 8,600 rupees per share. Now, Citi has introduced a 90-day positive catalyst watch, forecasting a strong earning trajectory driven by Polycab's dominant wires and also cable segment. Now, the company commands a 22 to 24% market share in India's organized cables market. Citi expects sustained revenue growth of 15 to 18% annually through FY27, which is fueled by rising infrastructure spending, housing demand, and also renewable energy projects. Margins are projected to improve to 13 to 14% from 12.5% in FY25, thanks to the operational efficiencies and also the premium product focus. Jaro Education made its stock market debut with a flat listing. Shares of Jaro Institute opened at IPO price of 890 rupees on both the NSE and BSE, reflecting investor caution despite blockbuster subscription demand. Now, the 450 crore IPO compressed a fresh issue of 170 crore for expansion and also an offer for sale for 280 crore rupees, which was a hit. Now, ahead of the listing, the company has secured 135 crore rupees from anchor investors. Analysts note that the P/E ratio of 38 times prices in aggressive growth, but competition in the edtech could actually test its edge. So proceeds will fuel brand building, tech upgrades, and also the debt reduction. Now on to another listing of the day, which is Sesha Sai Technologies, which has made a subdued market entry. Now, shares listed at 436 rupees on BSE and a 3.1% premium over 423 rupees of issue price, and also 432 rupees on the NSE, which is up 2.13%. But the initial cheer faded fast, with the stock slipping by over 6% amid broader fintech jitters. Now, the 813 crore rupee of main board IPO was a runway hit, oversubscribed 69.64 times. Founded in 1993, Hyderabad-based SSI services banks with EMV cards, secure IoT devices, and also fulfillment services, which is valued at 28 times earnings. Proceeds will drive the R&D capex and also the debt reduction. And the listing spree continues. Anand Rathi shares and stockbrokers debuted with a 4.4% premium. Now, shares listed at 432 rupees on the NSE and 432.1 on the BSE. 745 crore rupee fresh issue IPO smashed the expectations by being oversubscribed by 21.8 times overall. Now, with over 30 years under the Anand Rathi banner, the firm offers broking in equities, derivatives, commodities, and also currencies, plus margin trading and also wealth products. Now, 550 crore rupee from the proceeds will be used for the working capital, rest for growth, and stock has held steady post the open at 428 rupees, which is up 3.4%. And another stock that has made its debut was Solarworld Energy. Now, Solarworld Energy Solutions, which is an EPC player, debuted with a solid 10 to 11% premium today. Now, shares have opened at 389 rupees on the BSE, which is up 10.8% from the 351 rupee of issue price, and also 388.5 on the NSE, a 10.7% gain there. So 490 crore rupee main board IPO has consisted of 440 crore of fresh issue and also 50 crores of offer for sale. Now, established in 2015, Solarworld specializes in engineering, procurement, and also construction for solar projects, with a 2,528 crore order book across 46 completed sites in key states like Uttar Pradesh and Maharashtra. Proceeds from the IPO will fund a 1.2 gigawatt of solar PV manufacturing plant in Madhya Pradesh via its subsidiary Kartik Solarworld. Now, plus the corporate needs, which positioning it for 18 to 20% ROE in the competitive solar market. Now, time for an NDTV Profit exclusive, viewers. Corporate governance clouds are gathering over PTC India Financial Services. Now, what makes me say that? So, 3 independent directors have resigned abruptly, citing differences with, Chairman Manoj Kumar Jhawar. Now, the exits by Seema Bahuguna, a former IAS officer and also an ex-secretary in the Department of Public Enterprises, Ajay Kumar Gupta, and NV Bharati, follow, a heated nomination and also remuneration committee meeting in September, where Jhawar pushed a last-minute independent director appointment without the mandatory 7-day notice. Now, opposing directors were reportedly warned of consequences. Now, creating an environment Bahuguna called difficult for impartial functioning. Now, this echoes to 2022's mass exits that actually toppled the former leadership and also triggered penalties. Now, in another major leadership overhaul, the government has appointed Ashish Pandey as Managing Director and also CEO of Union Bank of India, and also Kalyan Kumar as Head of Central Bank of India, each for a 3-year term. Now, the Appointments Committee of the Cabinet, chaired by Prime Minister, greenlit the moves today. So Pandey is currently the executive director at Bank of Maharashtra, while Kumar is from Punjab National Bank's executive ranks. Now, he will succeed M.V. Rao at Central Bank of India. The Financial Services Institutions Bureau recommended both the leaders on May 30th after a rigorous selection process. Now, in a big move for India's aviation sector, the Directorate General of Civil Aviation has granted an aerodrome license to the Navi Mumbai International Airport. Now, this clears the final regulatory hurdle for its operations. Now, this milestone actually paves the way for the airport's inauguration on October 8, 2025, with commercial flights set to commence shortly after. Developed by Adani Airport Holdings in a 74:26 joint venture with Citco, the project actually spans 1,160 hectares near Panvel and also Ulve. easing congestion at Mumbai's Chhatrapati Shivaji Maharaj International Airport. Now, phase 1 will handle 20 million passengers annually with 4 terminals and 2 parallel runways. Tata Motors have shared an optimistic yet cautious insight at its recent analyst meet, navigating a cyber attack setback while spotlighting the robust domestic growth. Now, Jaguar Land Rover hit by a September 2025 cyber incident that halted the production, plans a phased restart in the coming days. Now, near-term demand remains challenging in Europe, China, and also the US due to economic headwinds and tariffs, but management eyes recovery through premium branding. The Iveco buyout, excluding defense, promises initial EPS accretion turning meaningfully positive in 2 years, potentially scaling South America revenues to $2 trillion. And management has upgraded the FY25 to 30 CV CAGR to 6 to 8% from 5 to 7%, which is outpacing the industry's 20%. Now, Q3 discounts will push the volumes amid the demerger effective October 1. Tata's roll hit 24% in FY25. Home textiles giant Welspun Living has kicked off its first analyst meet post the stinging 50% US tariff. Now, management has revealed that they have shouldered full 25% penalty hit to actually shield the market share in the US while passing the reciprocal slice to the customers. Now, this has kept retail demand steady, which is, as big box chains like Walmart and Target hold back full pass-throughs to the shoppers. But caution reigns as retailers are skimping on inventories, forecasting a 15 to 20% US revenue plunge in Q2 and also Q3 of FY26. Now, on profitability front, a near-term washout until the penalty lifts is being penciled in. So to counter, Welspun is ramping cost efficiencies, diversifying to UK, Europe and also Japan markets and accelerating India investments. With FY25 revenue at 10,269 crore rupees and PAT of 547 crore rupees, the company is eyeing a long-term resilience in its spaces and Christie brands. YouTube has agreed to pay $24.5 million to settle a lawsuit brought by Donald Trump, filed after the video platform suspended his account in the wake of 6th of January attack on US Capitol. Now, settlement from the video streaming giant's parent company, Alphabet, which also owns Google, comes after social media sites X, formerly known as Twitter, and Facebook also agreed to pay Trump for suspending his accounts. Now, Trump had accused YouTube and other tech companies of political bias, claiming that they had unfairly censored the conservative voices after the Capitol riot in 2021. On to some more global news. Now, China's manufacturing activity shrank for a 6th month in September, which is an official survey. So this suggests that producers are waiting for further stimulus to boost the domestic demand, as well as clarity on a US trade deal. So the US official purchasing managers index rose to a 6-month high of 49.8 in September versus 49.4 in August. Now, it has also remained below the 50 mark, separating growth from the contraction, but actually have topped a median forecast of 49.6. On to some national news now, which is a major weather alert from the Indian Meteorological Department has issued warnings for heavy to very heavy rainfall across 11 states and the Union Territories. Now, from Telangana to Assam, expect intense downpour with some areas facing up to 20 centimeters of rain in just 24 hours. Coastal regions and the northeast are also bracing for possible flooding and landslides, while rough seas have grounded the fishermen. Authorities has urged the residents to avoid the low-lying areas. Massive raids on casinos across Goa, Delhi, NCR, Mumbai and Rajkot have exposed an alleged Hawala and crypto racket tied to the Big Daddy casino. Now, over 15 locations have targeted under FEMA. ED has seized 2.25 crore rupees in cash, 14,000 US dollars, foreign currencies worth 8.5 lakh rupees, and also froze USDT crypto valued at 90 lakh rupees. Now, documents reveal that cross-border laundering through online platforms like WinDaddy. Now, the probe into the offshore gambling could actually unravel a larger network. On to some more global news, viewers. A White House meeting with top Republican and Democratic congressional leaders yielded no budget breakthrough, with both sides trading blame less than 36 hours before the government funding runs out, without Congress passing a bill to fund the federal operations before midnight Tuesday night. The government will partially close up shop and plunge Washington into a new round of political crisis. Now, you're looking at delayed key economic reports there, non-essential operations grinding to a halt, hundreds of thousands of civil servants temporarily left without pay, and payment of many social safety net benefits have been disrupted. 3 students confirmed dead and at least 38 still missing after an Islamic boarding school collapsed in East Java's Sidoarjo district in Indonesia. Now, the building gave way during afternoon prayers amid unauthorized construction, which is trapping dozens under rubble after over 100 injured and many critically. And there are many critical. So rescuers are racing against time, delivering oxygen to the survivors, but also unstable debris forced a brief halt. Families wait in anguish as the death toll may rise. Authorities probe lax safety standards in this second such incident this month. On to some more global news. Nepal has scripted history, clinching a stunning 2-0 series lead over West Indies in their first ever T20 bilateral against a full member. Now, after a 19-run win in the opener, they demolished the Windies by 90 runs. Now, bowling them out for a record low 83, the lowest by any full member against the associate. So, half centuries from Asif Sheikh and Sandeep Johra have powered Nepal to 173, with Muhammad Adil Alam 4-wicket haul sealing the route. So this massive upset, the biggest victory margin for an associate over, which is a test nation, boost Nepal's World Cup qualifier dreams. Now, before we wrap, viewers, let's also take a look at some of the key events to watch out for tomorrow. All eyes will be on the RBI's monetary policy decision. Economists expect rates to stay unchanged at 5.5%, while inflation remains muted, global risk loom. RBI may also revise the forecast with the rate cut still on the table. September auto sales data is set to be released tomorrow. Early signs point to strong growth driven by GST cuts and also festive demand. Two-wheelers benefit from the rising entry-level demand and also export revival. Four-wheelers see gains from dealer inventory build-up. Commercial vehicles also rebound on the last year's low base and infra push. With that, viewers, it's a wrap on this edition of Market Express, but stay tuned to NDTV Profit and don't go anywhere.
The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी बने।
NDTV World Summit 2025. Edge of the Unknown. 17th to 18th October. Only on NDTV.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है।
सोनू निगम के लिए जोरदार तालियां।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily lives. We aren't talking about time travel yet.
Gadgets tested under extreme conditions.
But why? I review tech for people like you and me. You know what? Let me take it from here.
All right.
Tech isn't that complicated. In fact, it's about making our lives simpler, better, and more fun. That's what we do on Tech 360.
The Nifty and Sensex closed flat with the negative bias ahead of the RBI's monetary policy meeting. Sectoral indices end mixed with the PSU Bank Index as the top gainer, while Nifty Media is the loser.
It doesn't impact the company's day-to-day workings. It doesn't impact our growth plans.
Man Industries loses close to 10% after SEBI bans the firm and top executives from the market. Management tells NDTV Profit that the regulatory action will have no operational impact. Tata Motors saw 25 to 30% growth in bookings from the 5th of September until Navratri, expects GST cuts to aid the growth outlook for FY26 in commercial and passenger vehicle segments. 3 independent directors resigned from the board of PTC India on differences with the chairman, Manoj Kumar, quoting unfavorable environment in the company as their reason for their resignation. And DGCA grants aerodrome license to Navi Mumbai International Airport that allows the use of an airport for regular landing and departure, bringing it closer to its vision of enhancing regional and international connectivity. Precious metals shine as gold scales a fresh record peak with a weaker dollar as the key headwind, while silver hits a 14-year high on the back of industrial demand for electronics. Prime Minister Narendra Modi welcomes Donald Trump's peace plan for Gaza, says it provides a pathway to long-term and sustainable peace, security and development for Palestinian and Israeli people. Good evening, you're watching Profit 360 on NDTV Profit and I'm Sanjana. First up, let's take a look at how the markets fared today. Nifty and Sensex closed slightly in the red ahead of the RBI monetary policy. And on the sectoral front, we saw indices ending mixed with PSU Bank Index as the top gainer, while Nifty Media was the loser. For more details, let's go across to my colleague Varsha, who's going to give us a wrap of all of the market action of the day.
So yes, benchmark closed flat with a negative bias. In fact, Hero MotoCorp gains over 3% for the day, its best Nifty performer, while Hero MotoCorp and JSW Steel are the top gainers when it comes to Nifty 50. ITC and Bharti Airtel fell the most in the Nifty, while Nifty Midcap, if you see, remains flat for the day. Tata Investment and Sundaram Finance gain the most when it comes to Nifty Midcap. Onto the small cap 250, the index ended in green. Gains were led by TV18 Broadcast and National Aluminium, while Nifty PSU Bank, if you see, emerged as a top gainer sector for the day, and the gains were led by Bank of India, Central Bank of India and Indian Bank. while Nifty PSU Bank and Nifty Metals gain over 1% for the day. Nifty Auto snaps 4-day losing streak and Nifty Pharma fell for the 7th consecutive day, while Nifty Metal, Financial Services and Bank gained for the 2nd consecutive day. Nifty IT fell for the 8th consecutive day, while lastly Nifty Media FUC fell for the 6th consecutive day.
Thanks for that, Varsha. And what's the best approach to take in this market? Vijay Raghavan Swaminathan, Managing Director and Head of Research, Avendus Spark Institutional Equities, believes it's the bottom-up or stock-specific approach. Let's listen into a snippet of our earlier conversation with him to understand why he thinks so.
I think I'll stick to my bottom-up ideas because every sector today has got something or other in form of headwinds. Okay, so as a result, it is going to be a stock-specific or bottom-up specific approach is what is needed at this point of time. Given that there is lots of uncertainty around job creation and lots of uncertainty about this exports, I think these two are important elements for us to see a holistic recovery in earnings cycle. So to put another way, I think for the broader indices, 15-16% of earnings to come through, only with consumption-led recovering is not adequate. So while consumer-related stocks can see some marginal upgrades, but it will be equally neutralized by downgrades in non-consumption sector, whether government-dependent sectors or B2B sectors can see downgrades if my other concerns continues to play out the way it is right now.
Meanwhile, Man Industries has not faced any compliance issues since 2021. This is the word coming in from Nikhil Mansukhani, the managing director of the company. And this is what he had to say while speaking exclusively to NDTV Profit and adding that SEBI's action that barred the company's management has not impacted operations. He further commented on the company's clean compliance record. Let's listen in.
Obviously, it concerns when the order is, though there is no financial impact on the company, the shareholders it concerns, and that's why we are here to clarify and to give a clarification that it doesn't impact the company's day-to-day workings. It doesn't impact our growth plans. It is of the past of 2015 to 21. The compliance since then we have been up to date. We haven't got any compliance issues since 2021 till date. And we are keeping monitoring very, very close, and all the related party or any we have stopped completely since 2021. And this is to, interest more shareholders, and which we have seen over the last 2 years, with where we have reached from where we were. Today we are, the order book is the strongest, which was never been the case. We were always trading between 1,015, 2,000 crores of top line. And today we have a 5,000 crore order book already in line. We have managed to, remove the assets which were not performing and generate that income as well into the company. And looking forward also, we will be doing the same. So yes, obviously this affects us, but it has been a long time overhang for the company as well. And by paying 25 lakhs and getting this matter disposed of and getting it over and done with, we can look forward now positively. So I think it was to be done someday or the other. It's happened today. It was supposed to happen someday. And yes, we will fight for our legal rights wherever we feel the order is not in our favor, and we will do the needful.
Meanwhile, Tata Motors shares were in spotlight after its analyst meet on Jaguar Land Rover, with the automaker addressing concerns post a cyber attack back in September, saying JLR will resume production in phases. However, the near-term demand outlook remains challenging across Europe, China and the US, is what the management cautioned. This update came even as Moody's downgraded Tata Motors, citing continued JLR headwinds. My colleague Puneet now brings you the big analyst call takeaways.
We did get an update from the company that they have started to resume some key operations. Yesterday at the analyst meet, they also discussed that it's coming up in a phased manner. So that's a key positive. Overall, they're expecting in terms of demand outlook, that does remain challenging. And that's going to be one of the key ones because, it's in near-term pressure experienced across geographies in Europe, China, amongst others, and the US, which is one of the key markets. 25% of the company's volumes comes from that market. So that's for JLR. It is reeling under pressure because of the cyber attack and production being halted for the second time this year. first time was in April due to the tariffs. When you look at the GST cuts as well as that is aiding essentially the passenger vehicle space as well as the CV space, they're expecting a single-digit growth in H2 FY26, but that's high single digits, so that's a key positive. They've also highlighted that 25 to 30% of the bookings have come from September 5th till Navratri as well. So that's another key positive coming in because that was the Shraddh period. So they have seen increased booking at this time, while they are expecting Q3 to see slightly higher discounts to push much more volumes, gain back that market share. So we are expecting some pressure on margins for Tata Motors, but that seems to be the consistent across the board for someone like a Maruti as well, who has taken a higher price cut on Brezza to match the 3XO in the market. Amongst others, management is expecting a 7 to 8% growth as a sub 5% growth for the passenger vehicle space, and that largely is something to watch out for. CV outlook is much more positive. Iveco, which was one of its key acquisition of over $4 billion, likely is EPS accretive initially, but that'll be the other progressive of how post the demerger, the focus shifts on that one. They've increased essentially the outlook to 6 to 8% for the industry for commercial vehicles versus 5 to 7% earlier. So that's another key positive. And finally, expecting a double-digit growth for the industry in H2 as well.
Thanks for that, Puneet. And now let's take a look at the IPO listings for today. Shares of Ceigall Technologies made their debut today, a 3% premium over IPO price, but shares slipped over 7% post-listing as early gains fizzled. Meanwhile, let's take a look at Anand Rathi Share and Stockbrokers Limited that listed earlier today with the 4% premium against issue price, reflecting robust investor appetite despite market volatility. Jaro Institute of Technology Management and Research Limited had a flat listing. Its issue price then fell 13% in initial trade as investor enthusiasm cooled after strong subscription for its 450 crore IPO. And last, Solarworld Energy Solutions jumped 11% on listing as the solar EPC player rode sector momentum. All 4 IPOs drawing heavy subscription across categories, but post-listing reactions ranged from modest gains and high volatility to sharp profit booking. Here are some reactions from management.
So essentially, if you see in the payment solutions vertical that we have predominantly three products. One is obviously the payment cards that we do, which are cards like debit cards, credit cards. We've got mass transit cards, prepaid cards, etc. We also do check leaves. So we have 1.2 billion check leaves a year. For customers across various banks for their SME customers and their savings account customers whoever use check leaves. And then we also have QR code that we do for banks and some of the fintechs for their merchant payments where you scan and pay on the QR codes. And recently we've innovated to add chips onto the QR code where you can tap and pay on the QR code. So these products comprise of revenues which get into our payments solution vertical.
From last 3.5 years, obviously we have started and we learned the way how fast and how and what kind of a transparency and what kind of a results is to be provided to the investors and how investors are looking at various different companies. And I think that philosophy is going to follow, because if you really look at it, we have been very, very meticulously delivering in our Anand Rathi Wealth result dot on between 10th to 15th of every quarter ending after post quarter ending. So I think the similar kind of similar nature and similar fashion, I think over here also we are going to probably start coming out with our results. So far growth of this company is concerned, so we are quite confident that this company is also going to grow over a period of time. There are enough shoots for the growth are available. By diversification the revenue stream, by stabilizing and looking at our total revenue mix between broking and non-broking and trying to improvise on a non-broking side so that you can create an annuity kind of a revenue over a period of time.
So since you have a lot of these courses at these said institutions, I think you also have roughly about 22 offices come learning centers. How should we see the growth of this? Will this largely be that the courses will continue at these said partner institutions, or are there a lot of them which use your learning centers, and how should we see the growth essentially of opening of new learning centers in this digital era?
Yes, so basically the growth will come with more partners. Every year we'll keep on adding 4 or 5 partners. And we are also mindful about the deliverables. So that's why we don't want to get too many partners very fast. We should be ensuring the delivery is quite good. More partners, more programs, more enrollments, and that's how the growth will come. And the TAM, the total addressable market, is quite big. In 2023, the TAM was something around 13,200 crore. And the TAM is expected to be in 28 around 41,450 crore. So the CAGR growth is around 25% plus.
Meanwhile, Adar Poonawalla has entered the race to acquire the Royal Challengers Bangalore IPL franchise as part of his broader business diversification strategy. Sources say this move underscores his ambition to expand beyond vaccines and finance into sports and entertainment. Let's go across to my colleague Vishwanath Nair for the latest updates.
Right, so the race for the Royal Challengers Bangalore cricket team is heating up now. What we understand from sources is that Adar Poonawalla is in the race to buy this cricketing franchise under the IPL. Remember that a few months ago we had reported that the United Spirits was looking to sell its stake in RCB as a way to monetize its assets, because it has been holding it for a fairly long time. So now, of course, it wanted to get rid of this asset. So what we understand from sources is that negotiations between potential bidders, including Adar Poonawalla, are still on. As part of this transaction, United Spirits, the owner of this franchisee, is expecting a one-time lump sum payment. This is different from what typically happens, which is that payments happen over 10 years. So in this specific case, they are seeking a one-time payment. Of course, the bidders are still in negotiations with the franchise owner. What we also know is that this is part of Adar Poonawalla's broader plan to diversify his business. If you remember that he's already bought considerable controlling stake in Dharma Productions, a film production company, and of course now with the RCB cricketing team online, it does seem like Adar Poonawalla is looking to expand his ownership into various types of businesses, specifically entertainment.
Thanks for that, Vishwanath. And moving on, Navi Mumbai International Airport has secured its aerodrome license from the DGCA, authorizing it as a regular landing and departure airport. Now, this critical milestone brings the airport closer to operational readiness ahead of its planned inauguration by the Prime Minister on October 8th and 9th. Maharashtra Chief Minister Devendra Fadnavis confirmed this. Now, the airport is a joint venture between the Adani Airports and KIDCO and is expected to enhance regional and international connectivity. Airlines like Air India Express, Indigo and Akasa Air have announced plans to begin operations from the new airport soon. Moving on, the September 30th deadline for Tata Sons to go public ends today. However, with its application for deregistration as a core investment company is still pending with the RBI, the company may avoid the mandatory listing requirement for now. Tata Sons has been working to shed its non-banking financial company status since March 2024, a move that could exempt it from this listing mandate. My colleague Vishwanath Nair joins us now with the latest details on what this means for Tata Group and its shareholders.
Talking about the missing listing, specifically about Tata Sons. Now, of course, it's part of the RBI's list of upper layer NBFCs. This is a list that was released back in September of 2022. At that point in time, the RBI's rules were that within 3 years, whichever companies of this list are not listed need to come out and list. And this was primarily being done so that corporate governance issues could be handled if there are any market sort of impact that might come in because of the wide sort of borrowing that these companies may have from listed players as well as lenders out there in the markets, and then those can be addressed as well if the company is listed on its own. So that's why the RBI pushed for the listing. Tata Sons, of course, is missing from that listed list. You've got Tata Capital that has already opened its IPO later this week. Why is this important, and how are they actually missing or avoiding that listing? Well, it's important because this essentially is a precursor to the RBI taking any action. Will the RBI take any action against this or not? And if the RBI does not take any action, then the question being that do the Tatas actually get a free hand when they talk about their companies being listed under the mandatory rules? How can they avoid the listing? Well, this CIC deregistration, that is something that they've been attempting since August last year. It's been a little over a year, and the RBI is still in the consideration phase. They've not taken a call on deregistering the company as a core investment company. It's a core investment company essentially because it invests money into other Tata Group companies, and therefore that's its only business. It doesn't have any natural business of its own. So if it is able to avoid that CIC tag, then it doesn't need to be classified as an NBFC, and therefore it doesn't need to list because it gets removed from the upper layer NBFC list. The whole issue here is that Tata Sons has already repaid its outstanding dues with the broader market. 20,000 crore, they've cleared their debt, and that makes them disconnected with the broader system. So the CIC tag doesn't necessarily apply. It's only a holding company or a sort of incubator company of the Tata Group for other group companies. So that's how they're going to avoid the listing, but whether the RBI buys this argument or not, that's something that we'll wait and watch.
Thanks, Vishwanath, and stay with us because big governance issues have now come to the fore at PTC India Financial Services, with sources telling us that 3 independent directors have resigned, all of them citing differences with Chairman Manoj Kumar Jhawar. Now, this marks a fresh governance crisis at the company, which had faced similar boardroom turmoil in the past. My colleague Vishwanath Nair back with us to tell us the exclusive details on what triggered these resignations and the wider implications for the firm. Vishwanath, over to you.
All right, so the developments at PTC India Financial Services have come to light. Of course, over the weekend, there was news reports as well as an exchange clarification saying the 3 independent directors from the board of PTC India Financial Services have resigned. All 3 of them had identical resignation letters. In their resignation letters, these 3 directors had pointed out that they are exiting primarily because the conditions in the company are such that they cannot uphold the highest levels of corporate governance at PTC India Financial Services, and that is why they've made the decision to resign from the company. Now, what we are learning from sources is that this entire thing was fomented by a very stormy meeting of the Nomination and Remuneration Committee earlier this month. Essentially, this NRC committee consists of these 3 same independent directors, Seema Bahuguna, Naveen Gupta, as well as PV Bharti, and Manoj Jhawar, who is the chairman of PTC India Financial Services. During this meeting, Manoj Jhawar had sought to recommend another independent director to join the board. However, this recommendation was made only a few hours before the board committee meeting. The requirement is that such recommendations come at least 7 days in advance, so the rest of the members are able to look at the candidature of this independent director and then decide whether their appointment is appropriate or not. So they did not get that time, and when the directors opposed this entire thing, Jhawar allegedly warned them of consequences that may follow if they don't agree to what the promoter wanted to do. Manoj Jhawar is also the chairman and managing director of PTC India, which is the promoter company of PTC India Financial Services, and therefore his position is quite important. He's also one of the nominee directors of the parent company on the PTC India Financial Services board. What we learned from sources is that despite all of these repeated discussions, the meeting became very heated, and then eventually the 3 directors decided that they should step down. In fact, the director in question whose appointment was being debated was Mini Ipe, who's also an independent director on PTC India's board, and therefore the appointment of Mini Ipe was being pushed by the parent, which these independent directors had opposed, and that is why they have gone ahead and exited the company now.
Thanks, Vishwanath, for that. And now let's take a look at how metals are doing. We saw precious metals shining in trade as gold scaled a record peak, while silver hit a 14-year high. Robust ETF inflows, resumption of interest rate cuts by US Fed, and lingering geopolitical and tariff uncertainty, along with a ramp-up in buying by central banks, are the key tailwinds for this gold. Meanwhile, industrial demand for electronics, growing EV demand, and solar boom are the factors fueling the silver rally. Now, earlier today, we spoke with Sachin Jain, Regional CEO, India, at World Gold Council for his outlook on gold prices. Let's listen in.
Let me reflect upon the Indian ETF side first. So the Indian ETF side, if you look at the AUMs on the 1st of January 2024, were about 41 tons. On the 1st of January 2025, were about 57 tons. Now, 16, 17 tons over the last year, you might say that is small, but based on the base value, it is fairly large. As of right now, we've seen upwards of 72 tons as AUM on ETFs, and we're seeing a constant interest on not just HNIs and financial investors, but people or average people on the floor or the street are getting interest. And I think ETF as a product is a regulated product. It's a phenomenal product. Not everybody understands that it's backed by physical gold. And hence, we foresee that gold ETF in particular in India is at the cusp of a growth. And we foresee a very phenomenal growth in the coming time because, being regulated, the ease by which you can hold it, purity, and all of those elements are taken care of.
And that's all the time we had on this edition of Profit 360. Stay tuned to NDTV Profit for more news and updates.
The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी बने।
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है।
रहमान
सोनू निगम के लिए जोरदार तालियां।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily lives. We aren't talking about time travel yet.
Gadgets tested under extreme conditions.
But why? I review tech for people like you and me. You know what? Let me take it from here.
All right.
Tech isn't that complicated. In fact, it's about making our lives simpler, better, and more fun. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं। उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Hello and welcome to KYC on NDTV Profit. On this show, we're going to talk about a stock that has gained over 30% in the last 1 month. This is at a time when viral and flus are on the rise. Is this hospital a beneficiary? We will get to know that. We're talking about Shalby. Welcome to KYC. I'm Hiral Datia and with me is Varsha. Clearly, this is an interesting time that we're talking to the company as well, when the entire season is with regards to virals and flus. But yes, Shalby does do a lot more. First, let's quickly understand what are the key answers that we want from the management so far. First up, the occupancy ramp up in Shalby Sanar. What is that actually going to look like from here on? Because that is the key in terms of the recent acquisitions as well. Secondly, when you talk about the Mumbai Greenfield Hospital, the timelines with regards to execution and operationalization of the Mumbai Greenfield Hospital is what we will be watching out for. And very lastly, if you talk about the company's implant business, now that is something that we should be looking out for because it sits under Shalby MedTech, and this is a key part of the company's long-term growth strategy and diversification plan as well. So these are the first 3 important points, Varsha, that I'm looking at.
Well, what I am looking at, one is the growth in average revenue per occupied bed. Because, Shalby is at such a phase wherein at a certain point of time, you cannot increase your RPOP beyond a certain level. So we might want to understand what is that ballpark percentage that Shalby is expecting when it comes to growth in RPOP. Then I would also like to know the EBITDA margin stability. Because in Q1 FY26, if you see, the margins were under pressure. Now this was because of high doctor costs. So I would want to know what is the sustainable EBITDA margin going ahead for, next 2 to 3 years. So these are my 2 main questions that, I would want to ask to the management.
Absolutely. In fact, let's shift focus and understand more about the company. Shalby operates a chain of multi-speciality hospitals, and this is across India. They have 11 hospitals which are spread across Western, Northern and Central India. A franchised hospital network is what they look at as well. In fact, implant is another segment that they're looking at. They manufacture US FDA approved implants and sell them across the US and other international markets as well. The plan is to make this $100 million business in the future, and that is one of the pressure points right now that the company is facing.
Right. And also we might want to understand what are the business highlights, when it comes to Shalby hospital business. So if you see the RPOP, that is average revenue per occupied bed, which is an important metric in an hospital, which stands at around 45,673 rupees. The operational bed, if you see, is at almost 1,400 odd. The occupied beds stand at 639 beds. With that, if you see, the occupancy rate is at 45%. Also, onto the average revenue per occupied bed, if you see the trajectory, company has seen a decent growth, when it comes to RPOP. So in FY22, the RPOP was 32,106. Fast forward to FY25, it stands at around 41,377. So good growth we have seen in RPOP when it comes to Shalby.
Okay, so that's with regards to where the RPOP go. But let's understand the segmental mix as well. Now, it's a specialty business, so the revenue mix is also pretty interesting. Arthroplasty, 41% of the revenues come in from here. Orthopedic contributes around, say, 10%. Oncology is pretty similar, and others is around 40%. So that's the kind of revenue breakup that you're looking at across verticals.
And also, Hiral was talking about Shalby Sanar, which is an important acquisition that the company has done. And why this is important? Because that will outline the growth going ahead. So onto the Shalby Sanar, the RPOP for that stands at around 89,803 rupees, while the bed capacity is at 130. The occupancy rate over here is only 22%, which management want to increase it, going ahead. So overall, if you see the pain point in Shalby Sanar is the occupancy rate, which is at only 22%.
Okay, so that's a question we will check with the management, Varsha. But let's understand all the parameters that we are going to consider from here on. First up, you have the income statement check that we will be doing. Balance sheet is another one. Cash flow return ratios are very important over here as well. Shareholding, street cred and valuations along with the outlook is what NDTV Profit is considering. But first up, let's quickly look at the income statement. It's very interesting because it's consistent and robust upward trend is what we've seen in revenues over the last 3 years. Between FY23 to 24, the growth did stabilize at around 15 to 16%, which indicated sustained business expansion. If you talk about the operating profit as well, that has seen a significant growth, and the growth on both these parameters is actually translated into profitability, which you can always see on the screens right now. Though what is interesting is in FY25, the profit number was only 2 crores, and a lot of factors that have impacted as well. The recent performance is also suggesting margin pressure, and this is potentially on the back of the acquisition which has been made, because over there occupancy was lower initially and the finance cost was also higher. We're talking about acquisition of Sanar hospitals. In fact, it has been a significant point of concern right now. The new hospital has actually faced slower than expected occupancy rates and has been operating at a loss, negatively impacting the consolidated margins and profitability. In fact, the management is expecting the facility to break even in the near future, but its performance will remain a key credit monitorable from here on. And the challenge is effective integration and scaling of the newly acquired expanded facilities to maintain the margin trajectory. And very lastly, when we spoke about the implant business, this division, while expected to contribute to revenue diversification, has actually faced challenges, and it is evident in the kind of profit growth and the margins that you're seeing, because it is a high working capital business with a significant inventory that is holding up, and it's yet not become consistent in terms of profitability. Expenses are also high, and that is what is impacting the margins, and the margins have been fluctuating over the last couple of years.
Now, talking about the balance sheet, let's see what are the key concerns there. Well, overall, not a dramatic one. The good thing is the debt to equity ratio, if you see, stand at around 0.48 levels, though debt has been increasing, but not at an alarming sign. So, and if you see the cash and bank balance, which has increased from 12 crores to 35 crores. So overall, not a dramatic one. So we have given a neutral rating when it comes to balance sheet.
Okay, so that's the balance sheet. Now let's look at the cash flow. Now there has been an increase in the working capital days of Shalby, and that is what has actually locked up most of the cash in the business. Acquisitions have dragged the cash flows, and this is on the back of initial losses, lower occupancy as well as the integration costs, and hence a downtick. That's a thumbs down on the cash flow, because your net cash flows, though have turned positive this time around, your cash flow number is negative at around 4 crores.
And talking about return ratios, let's see what's happening there. If you see return ratios, there's been dip in FY25 from FY24 levels. This is because of the impact of the profitability that we have seen. And one of the reasons is also the higher tax outgo that the company has seen. So overall, if you see the return ratios barring FY25 is good compared to its peers like Aster DM or Yatharth Hospital, but because of this a pressure in profitability, that 14% we are seeing for FY25, and that's one of the reasons why we have given a neutral rating when it comes to return ratios.
So that's with regards to return ratios. Let's look at the shareholding pattern from here on. Overall, promoters absolutely consistent. FIs have actually gone ahead and increased their stake from a 4.88 to a 5.21, which is a positive. Likewise, the DIIs have also marginally increased the stake as well. And your public shareholding slightly has gone down, though your shareholder base that has increased. So taking these three aspects into consideration, we've given it a thumbs up with regards to shareholding pattern.
Considering street cred, so in the last 1 month, company has given a very good returns of almost 30%, while in last 5 years, the stock is up 190%, though in last 1 year the stock was down almost 10%. But overall, if you see that's considering the returns that company has given, not a bad one. Even if you see the year-to-date returns have been around 9%, and so the last 1 month the stock has given actually very good returns, and one of the reasons why we have given an upward rating to it.
Okay. Let's look at the valuations over here. It's a very interesting aspect to look at the valuations here on, because if you have to compare it to peers, it probably sits in on number 3 in terms of being expensive, because you still have an Aster DM and Kim's, which are way higher as compared to a Shalby. And it's not only in terms of FY26, but even if you talk about FY27, the scenario remains the same. Now, with this kind of inconsistency that we've seen in terms of the earnings right now, I'm talking about the latest quarter, the investments that it is making as well, I think what analysts are of the opinion is that the outlook is something which is supporting the kind of earnings multiple that a Shalby is sitting on. And taking the outlook and the current and the future multiple into consideration, if it all fits in well and is able to perform, that is what we have to see, and hence a neutral rating in terms of evaluations go.
Right. Now, lastly, combining your analyst recommendation and outlook. Well, on analyst recommendation, there are not much analysts who are covering this stock, and hence there are only 2 analysts who have given buy rating, 0 hold and 0 sell, while the downside potential for is 15%. But then we have given a thumbs up. Now, this is basis outlook that the company is expecting. So they expected the EBITDA margin with operational leverage and business mix shift. So the EBITDA margins are bound to inch up. The occupancy is expected to touch at 50% plus for FY26, and the government mix is expected to reduce to 20% of revenue, and the single digit EBITDA margin is been expected for their implant business in FY26 and 27, and which will scale up to 20 to 25% in next 4 to 5 years. So good outlook, when it comes to FY27 and of course for the next 3 to 5 years, and this is the reason why we have given thumbs up when it comes to outlook.
Okay, so those are the parameters we are considering, but let's quickly look at all the parameters, the 8 ones, what do they stack up? Income statement, balance sheet, return ratio is a neutral, cash flow is a thumbs down. On the other 4, you have 3 thumbs up, which is shareholding, street credentials and street coverage and outlook. Valuations, again, neutral. And this takes us to a 5 on 8, which is also a pretty good rating in terms of where KYC goes. And the conversation from here on is going to be interesting, because Varsha did catch up with Shanay Shah, president of Shalby, to discuss the company's outlook and the plan of Mumbai Greenfield project. Let's quickly listen into that conversation.
Let's talk about what is the talk of the town when it comes to Shalby, because of the Delhi acquisition that you made, that is Sanar. The occupancy there remains low. I think it was almost 22% in Q1. Now, what steps are being taken to ramp up it quickly, and where do you want to take that occupancy level to?
Sure. So, look, Varsha, thank you for having me. We have seen that, usually we take 2 to 3 years for a hospital to really turn around. Essentially, this is a hospital where, it's been 6 quarters since we've taken over. And we have taken the right steps over the last, 6 quarters by getting the right clinical talent on board, as well as, the entire management rejig that happened at the senior level. So, the worst is behind us, and, we will see that the numbers will start improving, and they have started improving. In a couple of months ago, we also had an issue with, due to the Middle East crisis, and a lot of the patients, were not traveling into the NCR region at that time. So that did temporarily affect us. But, as I said, it's a high-end center for transplantation, whether it is liver, kidney, bone marrow, all high-end treatment happens at that hospital. And we are getting good traction, not only from international patients, but also from, the domestic patients, as well as patients traveling in from the neighboring states.
Understood. Also, Shanay, when it comes to your standalone hospital business, the margins over there were dropped due to higher doctor cost. When do you expect that margin stability, and what is the sustainable margin when it comes to hospital business going forward?
See, over the last few quarters, we have, kind of added a lot of doctors, and, we have, including some of the star doctors in some of these locations. So, we are building institutes of different specialities across all these different hospitals that we run. And for that, the initial investment is to get the right clinical talent on board. And that is the reason why we saw that, the earnings as a percentage to revenue has come down. not very significantly, at the absolute EBITDA level. But in the times to come, we do believe that we will stabilize, and we are looking to be at anywhere between 20 to 23% in this year.
Understood. Also, continuing on that, your Mumbai Greenfield Hospital, now that, Charity Commissioner has, the approvals are in place, what is the expected timeline for final approvals and handover?
So the Charity Commissioner, as you rightly said, has given the nod to us, and what we have to do now, as the trust is obliged to kind of submit the document to the Charity Commissioner, the document which has been agreed. So they are in the process of doing that. Once that is submitted, the following that the other formalities will be completed, and then we will be going in for the approvals with the BMC for the building plans, etc.
Usually, just wanted to understand a ballpark number, or rather ballpark months, if you could give us, by when you're expecting this project to go live?
So after the complete handover of the property to us, which should happen hopefully very soon over the next 3 to 6 months. Once that happens, it should take us roughly 3 years to kind of operationalize the hospital.
Understood. Also, continuing with the Mumbai, Greenfield Hospital, what is the expected bed capacity and target revenue per EBITDA once it becomes operational?
Yeah, so this is going to be a 175 bed facility where Shalby will be investing close to 250 odd crores. And it is a pure revenue share, with the trust. So there's no fixed lease arrangement here. And the average revenue per occupied bed, if that is what you were asking, in Bombay has been in the range of 50,000 to 60,000 for most hospitals. So we will be in that range for the Bombay hospital.
Continuing on that, Shanai, so if you see in Q1 FY26, the ARPOB, that is average revenue per occupied bed, was almost 45,000. Now, after a certain point of time, it's not possible to increase ARPOB at a certain level. What is the growth estimation when it comes to ARPOB, maybe, in next 1 or 2 years?
So see, I think for Shalby, the ARPOB has consistently gone up over the last several years. So if you look at the data 5 years ago, we were at around 30 to 33,000. Today we are at 45,000. We believe that the ARPOB growth will continue to be in the 4 to 5% range, on an annual basis. Now it may happen, it may be that you may see that there is a spike of 10% in 1 year. At times you will not see a spike in a particular year because the specialty mix also changes, and different specialties have a different ARPOB. So that might change, but in terms of the price revisions are in the range of 3 to 5% every year.
Understood. So 3 to 5% is what ARPOB growth is expected. Now, Shanai, let's talk about your implants business. Now, the revenue over there has seen growth of around 20%, but the EBITDA is still negative. When do you expect EBITDA to break even?
Yeah, so see, there are a couple of major changes that that is expected over the next 1 to 2 quarters. And these major changes, will basically help us reduce our cost of goods and at the same time improve our gross margin because of higher revenues and higher earnings per implant. Because we are launching certain implants which will actually give us a higher realization compared to our existing set of implants. So with these couple of things changing, and as you can see in the revenue growth, the acceptability of these implants is very high among the clinicians. Now this is something that will take a quarter or two, but we do believe that once that comes in place, we will definitely be EBITDA positive. and also, then be inching for a higher EBITDA margin.
Understood. And any revenue target that you have set for implant business, Shanai?
Yeah, so we have set revenue targets. Unfortunately, we are not sharing these revenue targets, at the moment. But this is a business which is grown significantly. So last year we did about 90 crores. The year before that we did about 60 odd crores. So it is growing at 50% for us, and we believe that it will continue the high growth trajectory.
Understood. Also, Shanai, a significant portion of debt is been linked to implants. Now, when do you expect your debt to meaningfully reduce? Any target that you have set for that?
Well, if you ask me, the debt equity ratio right now is roughly 0.3 to 0.4. So, we feel that, we are basically in a very comfortable debt to equity kind of position. Having said that, the plan is not to increase the debt, very significantly from here on. We believe that our internal accruals, in the hospitals business will take care of the interim requirements of funding, the implant business, as well as, some of the newer strategic interests of the group, like the hospital in Mumbai.
Understood. Shanai, my last question, before I let you go, you have given a top line growth target of around 12 to 15% for FY26. Do you want to inch that up? Number one. And number two, what are your target for EBITDA margins on a consolidated level?
Right. So, unfortunately, I will not be able to share, the numbers in terms of, what the EBITDA margins will be. But I told you that, we will be in the range of between 20 and 23% for the hospitals business. And in terms of, the revenue growth, we are well positioned because as I discussed, the implant business is in a high growth trajectory, and we are heavily investing in newer clinical practices. As I mentioned earlier, we are also investing heavily in oncology in terms of adding new linac bunkers in 3 of our hospitals, and also robotics in a very big way. So, the robotics within orthopedics for knee and hip replacements has really picked up very significantly for the group. And all these factors, will really help us, beat some of the past trends in terms of, our revenue growth numbers.
Well, this was the management of Shalby Limited. The top 3 takeaways from this interview would be: they expect unit economics for Shalby Sana to improve. EBITDA margin for hospital business is expected at 20 to 23% in FY26. And lastly, implant business to be EBITDA break even after few quarters. So all the main pain pointers have been addressed.
Absolutely, all pain points that the management has addressed, and the stock seeing some good moves, but completely out of time. Thanks for tuning in to KYC only on NDTV Profit for your profit.
The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी बने।
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
And NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है।
और रहमान सोनू निगम के लिए जोरदार तालियां।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily lives. We aren't talking about time travel yet.
Gadgets tested under extreme conditions.
But why? I review tech for people like you and me. You know what? Let me take it from here.
All right.
Tech isn't that complicated. In fact, it's about making our lives simpler, better, and more fun. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICICI for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
The world's defining stage. Leaders, visionaries, decision makers,
watching Your Money Matters here at NDTV Profit. I am Mahima Vajrajani. Now today we are going to take up two very interesting topics. The first one is how movies teach you a lesson in terms of where financial aspects are concerned. Movies are more than just entertainment. They make us laugh, cry, even dream big, and sometimes even teach us the smartest lessons about money. From iconic dialogues to unforgettable stories and the silver screen that has hidden gems of financial wisdom waiting to be discovered. Now in this show, we'll decode popular films and see how real life can actually guide our real life financial journey. And to discuss exactly this, we're joined by Anant Ladda, who's the founder of Invest Aaj for Kal, joining us now. Anant, hi. Always a pleasure speaking with you. Just want to start off this conversation by asking you as to what are some common financial lessons that movies so far have taught us as investors, and probably people would not have picked up them very well, but you'll be the right person to tell them as to what are these lessons?
Hi, firstly, thank you so much for having me on the show. Always pleasure discussing important financial topics with you guys. I think I'll give you some examples of movies which I loved and the financial principles which we can learn from the same movies. For example, there's a movie known as Bagma. That movie till now we have watched it from a emotional point of view, but I would suggest now you should watch that movie from retirement planning point of view. How important it is for each and every working professional to have a proper financial plan and to ensure that their retirement is taken care of is perfectly depicted by that movie. The 2008 crisis is one of the biggest crises which we have seen in history of the world. And there's a movie called as The Big Short. That movie teaches us how the complete crash happened in the market, how there was a person who actually predicted the crash and he was on the right side of the market still, just because people who were investing via that manager were not patient. He had to face a lot of trouble managing his positions, and how the complete crash happened. So it's a beautiful movie which will explain you the complete scenario and how big was it and how bad it was. Another hidden gem which is available on YouTube absolutely free of cost is Gafla. It comes from Harshad Mehta Times and shows you the exact depiction of how Harshad Mehta was, how he dealt. I know we have seen many movies and maybe many web series around Harshad Mehta, but that is one of the most raw movies you will see. It was made long back, so that is why I still love it, and it'll teach you how banking system was, what were the loopholes of the banking system, how there were a lot of people who were misusing those loopholes, and how the system evolved eventually. So it will teach you a lot of stuff.
Interesting. In fact, I also wanted to ask you that how accurately do you think movies depict that real life scenario and help you understand as to what financial challenges are and how, that overall impacts your decision making as well?
See, I think movie dramatizes our real life in a big way. So we cannot directly take inspiration from movies, but yes, we can take lessons from movies, because at times we see there's a flashy hero who's spending XYZ amount and impressing a heroine and finally winning everyone's heart, but that is practically not possible in real life. So we cannot blindly follow what is happening in movie. We usually go out, watch a movie to move around from the real life and real life problems which we have. But at the same time, there are some movies like there's a very interesting movie called Confessions of a Shopaholic. It teaches us how debt trap is, how you can be a part of that debt trap if you don't have control over your habits, if you have impulsive buying, what bad can happen with you, and how you can completely your financial life can be ruined because of the credit card cycle. So we can take some inspiration, we can take some learnings from movies, but we cannot completely follow the movies in our real life.
That brings me to the next question, because do you think that this kind of depiction or movies or documentaries that we see can completely change our behavior towards money? Because from what I understand is books have definitely done that. For me, I think Psychology of Money by Morgan Housel has changed the way I think about money, right? But do you think that impact, in the same manner and format movies can also make?
I think yes, if you are choosing the right movies. For example, there is another movie which is one of my all-time favorites, Guru. it teaches us the real life story of Shri Dhirubhai Ambani ji and how he started from nothing, what were the struggles which he faced and how he carried on his business. And today we all know, we all are fans of what Reliance has done for the country, or what Mukesh Ambani is now doing for the country, but how it actually started, from where it started, and how was it in 1980s. So we can take inspiration specifically if you want to do business of your own, and if you think it'll be a cakewalk, you should watch a movie called Guru, and you will learn the hardship of a real businessman and how you have to tackle it. So yes, we have to be very choosy about our movies. At the same time, if you're watching a movie where you have been shown how betting is done, and if you have been shown or depicted the glamour life of betting, and you're taking inspiration from that movie, probably you're on the wrong track. But if you have right selection of movies and then you're taking inspiration from them, can really help you out.
Makes sense, makes absolute sense. And in fact, what you mentioned about the way your brain works, right? If you watch something, you're going to catch that easily. That brings me to my next point, that key behavioral biases or pitfalls that these movies generally show about movie. What are those generally? And probably your suggestion as to what movies should take care of before making these things, and making sure that financial stability is kind of inked in the minds of every viewer that's watching a movie.
See, I feel debt is at times glamorized in some of the movies. So that has to be taken care of, because when a youngster is watching a movie and seeing a guy who's taking 100x leverage and actually becoming successful in the end, might be a wrong example for him. I won't quote the movie. This is the exact story of a movie, but I won't quote it here, because probably we are more attracted towards negative stuff as compared to positive stuff. And I don't want any attraction towards such kind of movies. But at the same time, if you if you're a parent of a young kid, you can probably make them watch some movies where from they can gain some inspiration. So that is how you can ensure that everything is taken care of. There's a movie known as The Wolf of Wall Street. So it's a single movie from which you can take right motivation as well, and you can get misguided also. If you will see the lifestyle of the main character of the movie, you will see glamour. You will see fun, you will see thrill. But when you see the end of the movie, you will realize that you have to be careful while dealings in the market. So completely depends on how you select a movie. And probably there are some of the movies which we as a parent should try and show it to our younger generation, so that they can learn from them.
Good that you talked about The Wolf of Wall Street. You also talked about The Big Short. There's also a movie called Inside Job. I want you to give our viewers a perspective as to what are the kind of financial lessons that these movies have actually taught, especially investors out there. I mean, maybe key 3 to 4 points that you think are really important, and probably the takeaways from these movies.
See, if you talk about Inside Job, that is also around the 2008 financial crisis. Correct. And how the complete crash happened. And it also it also covers topic around how even the government was involved in that scam or in that crash, and how government made mistakes. I think 3 important lessons which we can learn from these movies is, firstly, having proper asset allocation. If you're all the time invested 100% in equities and sometimes something happen in the market, your portfolio will go on for a toss. Secondly, learning and adopting newer technologies, newer investment options is also important. For example, till 2008, I don't think a lot of people were shorting the market or knew about shorting the market. But once that crash happened, everyone learned about derivatives. Everyone learned about how shorting happens or hedging happens in the market. So we should be open to newer investment options and investment possibilities. And third and final thing is, whatever happens, you should know your limit. You should know the risk profiling. You should know how much risk you can handle. If you take a risk which is beyond your capacity, then you will go on for a toss. If you don't have emergency fund and anything like that happened, your complete life will be shattered. So having proper emergency fund, proper financial plan is important. However aggressive you are, however good an investor you are, but whenever market wants to teach you a lesson, that will be really harsh. So plan for the worst and be ready for the best.
Fair point, Anant. And you know, in fact, my question to you would be that because a lot of these movies have taught about this, right? What you just spoke about. How much do you think storytelling can be leveraged to teach these financial lessons? Because we've seen that happening in the past 2 to 3 odd years, or maybe more than that, in short form content as well, right? Because people are adopting storytelling and trying to give financial lessons to the viewers out there. How do you think that this is the best tool, or maybe this can be leveraged in the best way possible to teach financial lessons?
I think it is very important, and you guys have also been doing an amazing job around the same. I have seen a lot of content which you guys are putting, which is in a story format. Because whenever there is a story which is being narrated, we connect to that story. We become one of the character of that story, and eventually we can take some lessons out of it. So this is one of the most beautiful manner to learn stuff. And of lately, specifically looking at the number of scams and the number of mishappenings which are happening in the market, storytelling is probably one of the best way to communicate the message and to ensure that investors are aware of the financial frauds which are happening in the market. Investors are aware. Recently, yesterday only, I was reading a story where around 20 crores of money was scammed by a scam happened to a Delhi person, and that was a digital arrest scam. We all know about digital arrest scam, but still people are getting scammed by the scammers in one or the other way. So storytelling probably can reach greater audience, can appeal to greater audience, and we can probably make a change.
Absolutely, Anand. In fact, I met an Uber driver very recently who talked about how he was scammed and probably lost 4.5 crores in dabba trading, and because of that, he's now driving an Uber. So it's very important that these mediums are used to portray the best financial knowledge that one person has. So and you're doing exactly the same thing. So thank you so much for that, and of course taking out the time and speaking with us at NDTV Profit.
Thank you so much. Have a good day. Thank you.
You too. Thank you so much. Okay, moving on to our next conversation. Now, big changes are arriving for NPS from 1st of October under the new multiple scheme framework. Non-government subscribers can now hold multiple schemes under one PRAN and invest up to 100% in equities in a high-risk variant. At the same time, PFRDA is revising annual maintenance charges as well via slab structure, setting upper caps based on corpus size. Now, also draft proposals suggest more flexible exit and withdrawal rules, shorter vesting periods, and higher lump sum limits. This is exactly what we're going to talk about today, what this means for your retirement planning. And to discuss all of this, we're joined by Rohit Chaus, the co-founder and CEO of GYR Financial Planners Private Limited, joining us now. Rohit, hi. Thank you so much for taking out the time and speaking with us. Take us through the entire view of what's happening from 1st of October. What are the changes that one can expect or anticipate from 1st of October in NPS?
Yeah, sure. Thanks, Mahima, for inviting me. And I think this is a very interesting topic that we are picking up today. Extremely concurrent with the changes being recommended. And